All right. Hello, everybody. Thanks for tuning in. I'm not sure how long we're going to be here today. I imagine it'll be maybe a couple hours uh, at best. So we will go over any and all questions you guys have. I don't have like a lesson plan. I have nothing planned here. It's just going to be chatting with you guys and helping you guys out with anything you are confused with trading. This is going to be for have you traded before? If you've never traded before, we'll answer any questions. Does not matter how simple or how complex it is. So if you have any questions, feel free to drop them in the top chat. And until then, I'm just going to be hanging out here. I'm probably going to do some of my nightly scanning and stuff right now to see what we got going into tomorrow. I imagine it's not going to be too much since most of the market's just getting caught up in the indexes, just trading much higher, which did we know? We did. And you can see up in here on the SPY, they're really going after it, aren't they? And let's see. All right. So rental in the Discord. So for future reference, if you're in the Discord, please throw it in YouTube chat so people that watch the replay can get it. I'll read it out for this one though. So question on time frame continuity override. So is it correct to simply say that out of the 60-day week and month, if I have a 60 and two other time frames, I can say I override the other one? Yes. This comes after watching your continuity again. 60 and day are now, it's now and today. So 60 is right now, today is today, right? And then 60 day and week overrides the month. Yes. So the 60 month and week override the day. Absolutely. The 60-day month override the week. Absolutely. You're nailing it. So I only need the 60 and three out of the four. Is it critical because or three out of the four time frames, but 60 is critical because it's right now? Absolutely. Yeah. So when you're trading, if that 60 is in your favor, that's like minimum what you need because it tells you right now you can be long or short depending on if the 60 is in your favor or not. So like for example, when SPY gaps down and you're two down week, two down day, two down month, right? Everything's really red, but the week goes green, day goes green, 60 green. At this point, when that 60 is green right here, 511.66, that's in your favor. So you can be a long buyer right off the rip right here above that, 511.61, because the week, day, and 60 is in your favor. And in here, when it's the 60 red and then the month was previously red in here, you can also be short here because the 60 is in your favor. And in the video, like the biggest thing, which I think you've already grasped it, but the biggest thing is just understanding 60 gets immediate control of right now, right? So if you're trading and you're looking at the charts intraday, the 60 is like the holy grail of like what's actually happening right now. Can I be long, short? Can I enter? Do I add to positions, etc.? So when it's going continuations and stuff like this, we can't buy on the continuation 60s, but we can say there's longs to be taken in there if you're on like the 5, the 15, 30 stuff intraday, right? And then when this goes reversal 60, there's shorts to be taken in here because you've now reversed stuff and the 60 is going down. It's just a matter of how much control does the 60 have, because the big move, as you've seen this previous week and this week, the big move is going to be the weekly chart. It's going to be the monthly chart as well. So weekly chart is like minimum for swing trading because it lasts overnight. So when you're going into CPI, I believe this was Tuesday here. So when you're going into CPI on Wednesday, overnight the week's green, right? So the month has no control. So we want to trade in the direction of that week at minimum because then we can actually hold our positions and they'll get better over time. So I hope that answers your question, but you pretty much nailed it. Sorry, my desk is a little. See if this works here. Oops. And for anyone that's wondering, that continuity event or video, it was posted last week. I believe it was on Sunday. So if you're looking for that, go and check that out. And you should just be able to find it on my YouTube channel. It should be like this trading indicator works, or this has to work, something in along those lines. So one question we did have, so like I want to trade weekly setups using options. Should I buy 2 weeks out or a month out? So for example, SPY, if you're trading this week's options, let's say you're a 540 call guy, it's trading 554. And those were not trading at $14 at the beginning of the week. I know that for a fact, right? So yes, you can create the position in here on the week, but you have to ask yourself, what are you trying to do? Are you just trying to catch this move here to here on the magnitude? Or are you trying to catch this low and then kind of like at the beginning of 2024 here, if we go back, you'll see this happen. It's like when this goes 3-2-2, fun to say and fun to do, which is what we say right here. If you just trade the weekly contract, you make out, right? You make money, but where the money's really made is holding positions. So I know not everyone can afford like thousands of shares on SPY, right? So that's where the contracts become useful. What I would say is if this weekly signal works, you can take, let's say you make 300% or something. Say you have a $1,000 position, you're up $2,000 or $3,000 on it. You can roll that, like you said, you can roll that into further expiration when this goes 2 up again. Because when this goes 2 up and the week goes green in here, it reconfirms what you know. So if you're already up 3,000 on the trade, you can take off all those weekly like positions at the end of last week. Once the new week opens and goes up, throw 2,000 of that into like 3 months out, right? Because then until this week reverses, you're good to go, right? And then here's your first reversal against right there. And then you have the 2-2 week on the decoupling of the week and year open right here in the beginning of 2024. 2-2 again. This is where you take maybe that 3,000 turned into like 10,000, right? This is where you take the 10,000 and you throw that all in there and you go another couple months out and then you let that go. And now once you're up in here, you're 60, 70,000 if you did it correctly. So getting those really big moves just off the weekly signal is important to create the position, but where you make all the money is holding. And like people say, it's time in the market is going to be what pays you. And when we say that with the strat, what we mean is signals that are still good and have not reversed are what pay you. So every signal you take, your goal should be, if we zoom back in here, your goal should be, yes, boom, take out my objective 438.78 or 438.4 in here. And then after that's taken out, if it is not reversed, add, or hold. That is the goal. And what most people do is they'll be like, I'm going to be a weekly trader. They buy this up this week and they're like, awesome, I made my money. They get out and then they don't look at it. It's like, no, that just reversed. Now it's going up, right? And all these guys who are short, they're in the wrong position. It's now going higher. So you want to actually add to winning positions because they tend to get better over time. So you're on futures, no options. Let's see. So can you do an example for day trading from the 1 hour to the month and how to process it? Of course. SPY, for example, this was day trading. And when you're day trading, you at minimum, you want the day and 60 in your favor, right? Because the day is today, right? So if the day is red, today you have to be a seller if you're a day trader. And then when the 60 is red, right now you have to be a seller, which tells you everyone else is selling and also tells you you should be selling, right? So that's the first thing. The next thing is, given that the day and 60 are today and right now, you want to know, does the week confirm what you know? Like in this case, this week, if you're a buyer this week on a 60 and daily basis, if that week's green, it confirms what you know. And then the month, if the month is green, it confirms what you know. So the best trades, you're going to have the month, week, day, and 60 all in your favor, which if you watch the continuity video, you should already know that. But when you're a day trader, you can get a little bit more specific in there and you can trade against the bigger time frames and trade it up and down and up and down. So during higher volatility, like we've seen with the VIX shooting up into 67 and then the daily bars becoming, $13 candlesticks every day, every 60 is a new day to you if you're a day trader. So you can make hay. You can buy it up, sell it down, buy it up, sell it down. So as far as what we're looking for, when it comes to hour to the month, I want to show you an example of Dow Jones, because this was a beautiful example from early in the week. And for anyone in stat, they can attest that we did alert this as an entry long to confirm what we knew about everything else. So the first thing we want to do is start higher time frame. Most people when they're day trading, they're like, oh, I'm going to open the 15-minute chart, and that's my bellwether chart, and I'm going to do this, this, and that to day trade. Not what we want to do. We want to start at the month. So Dow Jones on the month, when it was trading Tuesday, 395, you'll see the month was still red. Okay, so month is red. That's not today. That's not this week. That's not right now. So it's not super important to day trading. It's good to know if it's in your favor, though, because then you can get the bigger move on the month. Then the week. So earlier this week, we have a signal setting up, a 2-2 reversal week. That would occur above 396.49. So anytime we're above that, we want to be long all week, because the magnitude of that 3-2-2 week is to take out 412.01. Because a 3, 2 down, 2 up reversal, we target the other side of the 3. Because that 3 is a broadening formation. And if you caught the shorts with us off of Twitter, which we were alerted, you know exactly how that broadening formation formed. They poke up, shooter day, and then boom, slam it down. And then they start reversing, coming back into that try, so we target the other side. Because the broadening formation goes new highs, new lows, new highs, new lows, new highs is the goal. So we have the week in our favor if we take long positions. And then on Monday, we went inside day. So if you go to the nightly video Monday, within the first minute of the video, we will mention Dow Jones inside day to confirm or negate what we know to be true about the rest of the market. It'll either go inside down to the downside or inside up to the upside. This is an actionable signal, which we know causes price movement. Then, during that day, after that inside bar has formed, this is where the intraday trading occurs. So intraday traders, at minimum, you want 60 signals. You can also get down in there on the 15, the 5, and the 30 once you're good at it. But most people can't look at the chart and know within 3 seconds what they should do. So you want to start with the bigger time frames where you get 60 minutes to do your analysis and then create trades and positions, right? So on Monday, we can say it did go inside bar up on the day above this. We can mark that out. I'm going to put it in a different color so we can see that a little bit clearly. So 39604 did go inside up on the day. The 60 traded 2 to the upside to start the day. So although it traded up and then came back in, it did not reverse because the 60 was a 2 to the upside, right? So when it's 2 up in red, it's not a reversal, it's conflicted scenario, which means it's going up, but the sellers are slightly more aggressive. And what we're waiting for is additional signals to confirm this signal, because the more signals we have, the better the trade. The ideal trade is you have a 60, a daily, a weekly, and a monthly signal, and then you're an intraday trader. You get there on the 60 chart, trigger all the big time frames to go, and then you get this big, you see this big move in your favor. So once that second hour of trading has occurred, we form the inside 60. Similar to the day, which will either confirm or negate price direction. It's an equilibrium or consolidation. This inside 60 will confirm or negate price direction. So there's only 2 options. Either this 60 resolves higher, which confirms the daily signal and triggers the 322 on the week, which tells us the monthly seller we have no evidence of. Or this 60 breaks down, causing an outside day reversal, changing the week to red, the day to red, the 60 would be red at that point, and then the month red, right? So when this 60 breaks up, this is actually a simultaneous break. So our stop goes to the low of this 60, 395.63. And then once it makes high a day, we are now in like defensive mode, right? We want to play defense, which means we break even our stop. And then we say, until the day gets reversed, until the week gets reversed, this is a really good trade. So we want to stay in it, right? At worst, maybe you reduce position, but we want to stay in at all costs, meaning we keep that break even stop and we want to stay in. And then what we want to do is add to winning positions. As we know, if the day goes really green or the week starts going green, it tends to get greener because green will get greener, red will get redder over time. So when the 60 works, the week is now up even more from its weekly open, so it gets greener. The day is an enforced signal all day. So you have this signal on the day, this signal on the 60, this signal on the week, and that lasts 3 signals in force for 60 minutes with this inside up. This new 60 opens, now you have 2 signals in force, the day and the week. So the day and week guys are still in control, it's going higher. Then the third, or what, 1, 2, 3, 4, 5, fifth 60 of the day, you can see they stop people out. So they make a slight lower low. They do 2 to reversal 60, right? But it does not change daily continuity. It does not change the color of that day. So we want to stay long. It does not come to our entry price. So we want to stay long. And the week, still very green at that point. So we want to stay long. Then it creates a hammer 60 here. This is where we add to winning positions, as signals will cause movement, and the more signals, the better. So we add to our position. Maybe you double your position size in here. And then your new stop on the position can be put down here. 397.15. At the low of that. And then we have 2, 2, 2. And then you can see slight lower low. This is occurring, what, second 60 on Wednesday. The week is still really green. The day is nowhere near reversing on Wednesday here. It's 2 to the upside. Then they go 3, 2 up 60, 1, 2 up makes new high a day, and then sideways, right? So still good. You get to hold these positions because your stops are in profit or break even. The week is still in control until Friday. The month is not in control because the week's going up this week. And then the day is still good. So this daily signal, you get to hold long. And then come Thursday, you're going to see they gap it up. They go 2 up in red. So a conflicted scenario, right? And then 1, 260 to the upside. So they continue. That's a continuation pattern, which you can add on. And at this point, when you add to that, your cost basis is way down here. No matter, even if you add a lot of it, your cost basis is going to be well below this low a day. So you can add on that. Then you get another 60 in here, you can add on that. And at that point, now we're towards the end of the week. The question is on Friday, do we get profit taking or not? But we're nowhere near reversing this week. So if it runs out of time Friday, does not take out this weekly magnitude of 412.01, what we want to say is next week we'll either confirm our positions here or negate. So let's say next week, Monday confirms, they go inside week and then green, and then they become 2 to the upside. At that point, we get to continue holding. As the weekly 2 to the upside this week goes 2 up again next week, and that condition of the week going up has not changed. And at that point, we're also nowhere near reversing this daily, right? You'd have to take this out, 403.19. And then the month, now it's not much continuity here. So next week it needs to be green, or else we're kind of no continuity levels on those bigger time frames. So hopefully that makes sense. And then we can go for another example here. Now we'll check out if there's any questions about this. So we don't have to have all 4 time frames in our favor. We can see SPY, for example. If you're an intraday guy, you just need the day in 60. So when this 60 goes 2 down, 2 up reversal here on SPY, and it's above 519, the magnitude of that is to try and make the new high to Monday's highs here. At that point, you'll see on Tuesday, the day was green, 60 was green. The week, last week was green, so we can buy that here. And then until that reverses, we try and stay in there because we have a lot of continuity in our favor, the week, the day, and the 60. So buy, continue, 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 continue. First reversal against, partial, reduced by half. Or hold with a break-even stop, depends what you're doing. But that's an example of just intraday trade. And then when it goes 3 off the highs, you can also play the short in here. Is the 60s in your favor? Not everyone's going to do that. It's a little more difficult. I wouldn't suggest it for new traders. But you can see 3, it's a broadening formation. So we now have a broadening formation we can draw out. It goes 3-2 down. So they continued that rejection of the morning or the high of day. Here's your broadening formation. Then they go up. Inside 60 actionable signal. What does that do? Inside down short. What does that change? The day goes 2 up in red. So 60 and day override the weekly for control, then sell, 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 sell. And we alerted this on Twitter. So for anyone that's just tuning in and curious what we're talking about here, this is something we pointed out on Twitter. Not only did SPY do that, but Qs did that here, inside 60 down, simultaneous break, adding evidence to that trade intraday. And then I believe it was the Dow Jones also did that here, inside 60 down, adding evidence to the SPY and Qs, giving you a lot of evidence for that short intraday. And then you'll see the day in 60 the next day, that's a reversal, and they start coming back through it, changing control again. So you can trade it up, trade it down, trade it back up. And ideally, since the week was green at that point, and they're coming back up on the week, you want to hold the upside positions and close out the short positions. Unless that week flips red, then you would hold the short positions. So hopefully that answers your question kind of thoroughly. And I know I talk quick, so if there's any questions, feel free to ask. You understand now? Awesome. And I saw a lot of people like they watched the continuity video and then they watched the video I put out yesterday on position management. They're like, it all makes sense, and I'm so glad to hear that. So amazing stuff. So next question here, broadening formation questions. Qs, weekly broadening formation from the lows in April. Thought we'd see 413. This new broadening formation on the Qs might suggest we are heading to the highs. No, it's not might. It suggests for sure, right? So we need to remove the words might, probably, maybe, could, etc. from our vocabulary. And the reason we need to do that is because you need to speak in what we know to be true about magnitude and continuity and actionable signals. So do not use those words. It's going to mess up your mental, because if you're trading and you're like, well, it might do this, then you take a position and then maybe it works, and then you're like, well, it might, so I'm not really sure, and then like you get kind of scared to hold it and whatnot. The strat is built out so we do not have to use those words. We speak in what we know to be true. Super important. And I do have a video that's planned. I haven't written the script for it or anything, but we're going to talk a lot about like the mentality of winning traders when it comes to the strat, because so many people are missing that point specifically, and it's something that I need to nail home, but we're not going to do that all here. That being said, though, when you look at the Qs, the reason it came back in and the reason we could expect that to occur is this. Yes, do you have this broadening formation back here on the week? Yes, that is true, right? But we know price trades in a series of broadening formations. So it's not just going to be one try, right? So when this is coming back in, this is also a broadening formation. And you might be like, that's like a cop-out answer, Alex, which, believe what you want. That's fine. But when this week goes gap down in green, it's no longer going down on a weekly basis. So you have to be a buyer last week. And we picked that out perfectly. We're like 353 stocks reversed up, 53 continued lower on Tuesday last week. That's a buy, right? And then this week, 271 signals went 2-2 to the upside, and there is, I think, 7 in 4 signals to the downside right now. That's still a buy, add, right? So important to understand that. And the reason we do this and how the broadening formation works is when continuity changes. I'm going to blow this up. When continuity changes is when you draw it. So when continuity changes is the first time you draw it. When a signal forms is also the first time you draw it, if that makes sense. You can also draw it off of outside bars, which are broadening formations. So, for example, when a 2-2 week occurs in here, this is a broadening formation, so we can draw that out. You can see the next week opens, it expands and gets bigger, right? So we know the range will expand over time. And then continuity is still good in here. There's a 3, that's also a broadening formation. And these are the smaller tries on like the daily and 60 time frames. And then it goes up and then boom, right here, weekly continuity changes. So what are we now thinking? When this weekly goes 2 up in red, this is like the most recent try, or we would call it the sub try. It's not the big major time frame try, but this is the most recent one. So when it goes 2-2 weak and we go back into this outside bar, we know this is broadening formation, a 3. So once that works, we're going down here, 473.54. And then until weekly continuity changes, that try is continually getting bigger. So we can see they make the new low, we redraw right to left, including all data. And unlike other trading patterns, the broadening formation is not hindsight. It is based on previous range, not on current range or future range, right? So we would draw it to here. The new week opens, 2 to the downside again. We redraw it in here. This 3, so 1, 2, 3, 4 bars. These are outside of 1, 2, 3, 4, 5 bars here. This is a compound 3. And what we're identifying is that, exactly that. Where you can see this is a big outside bar to this, which is why it's a universal truth. It has to work this way. Then you can see when this try is drawn out, the new week opens 2 down in green. Right there, when that continuity changes, you now redraw the try. And you can see we took out the recent lows, or the previous lows here, here, here. There's your objective broadening formation, gauging magnitude. The other side of the range is here. So we can identify this is a 3 to that. And then when this continuity changes, new 3 starts occurring. We're looking for this to go 3 to that. So they make the low, the high, new low, new high, right? So when that 2-2 occurs on the week, we're expecting weekly magnitude. And then if the week does not reverse, we're expecting that. And that has to occur. Price must do this. So there's no ifs, ands, or buts. When that goes 2-2, you're like, it's going to magnitude here. And then if that position stays good, it's going here, right? And when we say stay good, it means we don't have a 2-2 reversal against us, or any reversal against us, or changing continuity against us. All right, let's see. Do you enter on market open or wait for a bit? I ask because we'll get a 2 up on the day with the week in force. I feel I enter too late, letting the market breathe. It depends on the trader. If you're a new trader, truly, I say to you, you don't need to be that first one in, right? Does not mean you cannot be. What happens though is, if you watched our continuity video, when the day opens here, right? And then the first 60 of the day opens here. So we have less evidence, because the 60 can not be identified as a separate group. The other thing that happens is there is no 60 signal unless a signal formed yesterday, right? So if you're entering at the open, the ideal scenario is you have a 60 signal that causes a daily signal to trigger or confirm weekly and monthly signals, right? So we want multiple signals in force if we're doing that at the open, ideally. The other thing then is in the morning, you don't get a 60 signal that sets up during the day you're trading until potentially the second 60 of the day, because a 2-2 reversal where it goes gap up and sell, which do I have an example of that today? I actually don't. We didn't have any gap up sells today, so I don't have any examples. But let's just go to Williams Sonoma. This is a great example of it on earnings. So you'll notice the first 60 of the day here, there is no signal. It's just 2 up in red. So where are the entries that are occurring as actionable signals to take positions during the first 60 of the day or during the morning session? The signals are occurring on the 1, 2, 3, 4, 5, 15, and 30-minute time frames, right? Because until that second 60 of the day, there's no signal. So when this goes 2 up and then 2 down reversal right here, that's the first time we're taking any trades on stuff like this. Now, when you're looking at something like SPY today, and yesterday, and the day before that, you'll see on the 60, there is no signal. So there's no entry in here unless you're a continuity entry guy on the red to green move, which we're not going to talk about here. We're talking about signals. But what you'll notice is if we drop time frames, you will get signals. You have a 3-2 reversal in here. That's a reversal signal. If you go to the 5-minute, you have a broadening formation, which you can see right here, right to left, broadening formation, 3-2 to get longs. And what most people do is they go in here and they're like, oh, it looks good. They buy it in the morning, stop out. Then they try and buy it again, stop out. And then it finally goes and they're like, What gives, right? So what we want to do is we wait for that good morning broadening formation is what we say. The good morning try. And it starts right here when this 225 minute makes low a day. So these two bars become an outside bar of this. And then the inside bar up, we talked about that this morning, goes to the highs, creates the first position. Take profit when it starts reclaiming the morning highs. Maybe it stops out that position for a profit. So be it. 3, 2, 2 to the downside. Change in continuity on the 5-minute here. Where's it trying to go now? Top of that. So now we can go and get this broadening formation and say, well, if this goes 3, 2, we can target high day. Once it's at high day, we can break even our stop and say, well, it looks good on the day, looks good on the week, looks good on the 60, looks good on the month, and we're just going to hold, right? So we call this doing battle if you're getting in here really early in the morning, because you have to be quick, because these signals last 5 minutes or they last 15 minutes. So you have to be ready to change on a dime or protect yourself on a dime right when that's occurring. Whereas if you stick to the 60s and 30s, you get a half hour or 60 minutes to kind of understand what's going on and make your analysis, which most people, again, like they're going to struggle in here if they're on a 1 or 2 or 3 minute, because doing that analysis really quick, some people just can't do that right away with the strat. Most people should be able to get to the point where you can look at it and be like long, and you can do it with your eyes closed pretty much. And that will happen if you stick with the strat long enough. But it's important to understand in the morning, those signals are occurring on lower time frames. We're going to look for the good morning try. And this is where people get stopped out, and then we get long. So if we go to something like NVIDIA, this would be an example of where this isn't the case, but we have a signal. So notice the first 15 minute of the day trades hammer on the day. What is this doing to the daily time frames and the weekly time frames, monthly time frames? Because we want to know all the conditions, right? So in the morning, this morning, 2 up on the 60. The day is hammer and force. That's a signal. So that's additional evidence above 118.16. We want to create positions on the lower time frames to manage our risk better. On the week, if we go in here, the week is a 2-2 reversal with a magnitude to start coming back through this. And again, drawing the broadening formation, we're trying to go and take out these guys at all-time highs for an outside month. And then the month, red to green, full time from continuity up. So in the morning here, is there long positions you could be taking just off the 60? Yeah. If you're buying the open of the 60, you might get stopped out a few times. But what we want to do is find the signal that's going to cause the movement. So the 15 momentum hammer forms, second 15 of the day right here, that's a buy. And I can literally pull up the live stream this morning, and we said to buy NVIDIA. We said to buy AVGO this morning, 15 right there, same exact thing, right? Confirming the week, two going 3 on the month. Day is 2 up, all of that's good. If we go to MU this morning, pretty much the exact same thing. Momentum hammer to the highs. And then the 3-2 right here, we also mentioned that as an add to our position, as it would not have taken your break-even stop here. And if we go to AMD, we have the 15 are here, and the 2-2-15 here, and the 2-2-15 here to get longs. And I'm still holding some of that. So hopefully you can see we want to use those small time frames to manage our risk better. And also in the morning when volatility is really high, it's going to protect you if things do start changing on like the second 15 or the second 30 of the day. The TFC bars indicator, I have been in talks with the guy who created it. I just mentioned it to him. So I know everyone wants the TFC bars indicator. The problem is, maybe I ruffle some feathers here. This is his words, not mine. So this is a coding guy from that works with TradingView and codes indicators there. He said, their critique and bans are totally stupid because they banned and critiqued the indicator and said the originality and usefulness is not there. And it says, ensure your script is original. Like, and I can show you this. So you don't hate TradingView enough, in my opinion. But I don't want to dox him with all this stuff here. Let me see if I can. Right here. So you can say, hey, you've been banned for 10 minutes from idea stream publishing, blah, 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 blah. Originality and usefulness. Ensure your script is original and will add value to the community scripts. It's the best indicator out of every single one in that whole community scripts tab, and it's not useful or original. Isn't that crazy? Avoid rehashing open source built-ins, blah, 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 right? And then omissions and unrealistic claims. Calls to request security that requests non-offset expressions from higher time frames while using bar merge look ahead on. Produces a look ahead bias on historical bars, which it updates in real time. So this is not true. So sadly, the world does not like the truth in a lot of things. That's just how it is. But I'm working to try and get something out for you guys. I'm going to talk to TradingView. I do have a DM open with them. So I'm going to try my best to get that for you guys. If you have Thinkorswim, you can check out the Discord. If you go to Strat Alerts in here. So if you join the Discord at stratalerts.com/discord, you can go into scripts and scams section, which is going to be down here. We have a lot of channels. I know there's a lot of stuff going on in here. For sake of simplicity here, I'll just type this in. So you can see it's in the learning and education of the strat stuff. If you go in here and you have Thinkorswim, you can type in and search TFC bars. And you'll see TFC bars TradingView, which is the link to the current script that got removed. And then TFC bars for Thinkorswim, which I believe is this one here. And there might be 2 posts in there. Yeah, so continuity bars TOS, this is going to be the code in here for you. And you can copy and paste that in your Thinkorswim and you can get the same exact thing. Let's see. Also waiting, I've had the 60 flip on me and go against the weekly signal. Yep, the 60 will confirm or negate intraday what is occurring. We had a great example of that on PNW today. And the reason this is important to understand is because it tells, or not PNW, PDD. It tells you when the buying and selling is done. So notice, right in the morning here, we had longs. We mentioned this, and we had a mention in the Discord as a 3-2, I believe, to the upside, confirming 3-2 week for an outside month, which it did do. So you can see that they go outside month, take it out. Second 60 flip, 930 right here, inside actionable signal 15 down, causing price movement. This is also the decoupling, where the 60 open separates from the day, giving us more evidence. So right when this occurred, we said either reduce by half or fully exit. We have no evidence of that daily buyer, as the 60 is no longer confirming what we know, which also means we have no evidence of the weekly buyer or the monthly buyer. Now, does that mean whenever something does this, we have to freak out? No, it means we reduce our position to protect ourselves, guaranteeing a profit, getting our stop at our new cost basis. Go and watch the video on position management if you want to learn about that. And then if it stops us out, so be it. We made our money, go on to the next trade, find something else that's working. And if it doesn't, add back when it sets up again. Because this could have gone inside down and then hammer RevStrat 15 and we would have add back to it. But price didn't do that, so we didn't do that. So hopefully that makes sense as far as the 60 flip is concerned. So kind of off topic, but why options trading is more than futures? Because, and this is so important to understand with futures, when you're trading futures, you are lacking evidence. Does not mean you can't trade futures. All it means is when we trade stocks, we have way more evidence and it's way more fun because we can separate, like if we go to ES in here, and this is in standard market conditions. When the market really starts moving like this, we're always trading the indexes because they're liquid, they move a lot, and the options pay very nicely when things go in our favor. Same with like SPX. If you're going to do that, we do that as well. And futures, same exact thing. You can do that as well. But in standard market conditions where you can see they're chopping around, doing nothing in here, and then not the biggest moves on the week here, and they're kind of just grind. This is not where we want that. We're like very interested in the futures. What we're more interested in is things that look like the futures, but are much greener, showing more aggression of the buyers, if that makes sense. So where SPY may move up $5 in a week, when we go and trade full time from continuity, all the tech stocks like the semis and chips, those semis and chips are maybe up 15% in the same week because the natural buying is occurring in the semis and chips and it's being reflected in the average or the index or the futures, whatever you'd like to call it, because the futures are an average of 500 stocks together, right? So we want to go and trade the top 10 strongest stocks in the futures, which we can objectively define based on continuity in the strat. So for example, we have this hammer week on ES, that's a buy. If you're a futures trader, boom, right there, you're long. And unless that daily reverses, that week's in control. You can see Monday, Tuesday, Wednesday, Thursday, and now Friday, right? So super simple stuff. If we go to then the scan site, which is going to allow us to quantify this really simply, we can say we want the 2 up on the week, and we want things with full time frame continuity, because those are going to be the strongest things in the market at that point. So when we scan this, you're going to notice we get 137 stocks. These are the strongest ones. And since the market did flip from red to green today on the monthlies, a lot of things are joining this list. But early in the week, this was about 20 stocks big. So we can go trade the strongest 20 stocks that are full time frame continuity up while the market's recovering. And then we can also trade the market recovery. And then we can also go and trade anything else that we want. But sticking on the strong ones and then playing those indexes together will make more. simply because the bigger ones are going to move bigger. For example, if we go to Melly, we didn't trade this one, but it's just an example off the top of my head here. You'll notice last week it went 2 up, 3-2 up. So that's a buy last week, right? You'll also notice it's 2-month inside bar pattern to the upside for 2 months, right? And then when this is recovering, you'll notice if we look at this last week and we measure this out, this is up 21%, right? And that's occurring while the SPY is up 8%. So do you see how you can double or triple the amount you make trading the strongest names that are being reflected in the indexes? I hope that should be obvious, right? And then the other thing that's important is the greenest names like this are where the most movement occurs on the signals. So when this inside day breaks and it doesn't really go anywhere, that's fine. We still have a ton of evidence of this buyer, right? And then we get the 2-2 day reversal. So instead of being a momentum signal, just continuation, this is reversal, 2-2. Anyone short in here, they're wrong, right? The day is green, the week's green, the month is green. Anytime it's green intraday in here, all these shorts of yesterday are getting plastered. And you'll see this. 4% today. So when we compare that to SPY intraday, SPY does not even 1% today. So do you see how the long green bars and breaking it down to either sector or specific strong names can make you more money? I hope so. And the scan and the strat site does that completely for you. This was one that would have shown up on the scans last week with full time from continuity last week. So not one I personally trade because it's a really big name, but for those that like to trade hyper illiquid options that can go with 10,000% in a day, that's one of the cool names to be trading. And then the last thing I would add here is we gain more evidence when we look at sector ETFs as well as all the indexes together. So if you're coming from like a futures trading, like maybe ICT or something background, you're maybe looking at the SPY and the Qs or the IWM and the Dow Jones, or maybe all four. But that's only 4 separate data points. Maybe you add in the Dixie, that gives you a 5th one. And if you're really good, you're adding in the VIX and the UVXY. So you got 6 data points now. And then what we do is we add in the semiconductor sector, the healthcare sector, communication sector, discretionary sector, financial sector, materials sector, real estate sector, the gold miners, gold. We add in tech, biotechs. We add in IYZ, which is a telecommunications ETF, the staples, which is a defensive sector. When the market's going down, this is where we make money long and short at the same time. The regional banks, which are a subset of the financial sector, and they trade with the IWM. The KBE, which is the banking ETF. You can also look at KBWB. It's pretty much similar. And then biotechs again. The junior miners, so there's 2 types of gold miners, and this all confirms or negates gold. So if you're a gold trader, you might as well watch the miners, right? You also probably want to watch the Dixie, because when the Dixie drops like a rock, gold goes flying off the rails. If you look at energies, you'll have XLE. Then you have OIH, another energy sector. So you have OIH, which is, I believe, the services, and then XOP, which is like something to do with the production, or forgive me, I can't off the top of my head. I just know they're all energy sectors. But then retail sectors, so like TJ Maxx, Macy's, all that stuff. And then you have pretty much the big 7 names like Apple, Amazon, Microsoft, Nvidia, Google, Netflix, Adobe, that type of stuff. So we're tracking like the biggest movers in the market. We could also have like SMCI in there, and we're tracking the whole market all at once. So we can gather evidence, and we can say, well, 80% of the market's going up today. We can expect the market to close at the highs right in the morning when that's occurring. The same way at the beginning of the week, we can say everything's reversing on the week across the whole market. We can expect the week to close out at the highs at the beginning of the week. So based on the amount of evidence you can bring together, you can have more evidence for your trades. So unlike people who trade intraday and they're like, oh, I'm going to trade the ES and here's my 30 points and I just made my 1,000 for the day. We're like, okay, here's my ES, here's my 30 points. I added to it 3 times. That's my 10,000 for the day. And every sector is going up, so I'm going to leave the position open. And then at the end of the week, maybe it's 70,000 or whatever. And that's just made up numbers, of course. But it gives you evidence and confidence in what you're doing, because if everything's a 2 to the upside on the day and the week and the 60, why would you get out of long positions? It's all going up. So if you're getting out of trades early, this will help you. If you're not holding trades long enough, or maybe you're trying to short when things are all going up, this will help you. It gives you really the easiest view of what's actually occurring if you know the strat concepts. So that's like a very in-depth answer. I hope that answers everything for you. I guess the last thing I would say is we can also count the signals. So when SPY, Qs, Dow Jones, IWM all go inside on the 60, we got inside bar signal across the whole entire market. 100% of the market's setting that up. And you might have 600 inside bars on the 60. So since we know signals cause movement, what are we waiting for the next 60? The biggest move maybe in the past day or week or so, right? If all of those things happen. And that's where things like Dow Jones, we actually can't zoom out in here, but that's where the things like the Dow Jones 60 and the IWM 60 example we were talking about come into play. And if we look at, for example, let me just go to, I think it was in the middle of last week, we had a very solid example of exactly that. So you can see throughout the week, I'm kind of posting my analysis here. So over 2,000 stocks, we have less than 12 things two down on the 60. That's a lot of twos up. And that's August 8th, right? So nothing's going down for the most part. And then when we look at it on a sector ETF basis, was this a buy? Look at this. It should be obvious. You should look at that and be like, huh, it doesn't look like Christmas. It looks like a buy, right? It's not like it's green, red, green, red, green, red. There's a few red in there, but everything's going up. So that's definite buy. And if we go then look at the examples from in here, you can see, so SPY, Dow Jones, Qs, simultaneous inside 60s. So 3 of the 4 index go inside. And then we break it down by sector. We can say semis, financials, healthcares. And then this is where we picked up. The semis were super strong. This occurred on August 7th. So if we go back to August 7th in the SMH sector, you can see exactly what had occurred. And just for my sanity here, so this is the 7th. And this was actually the short. There's additional 60s in here, but it'll give you an example of what we're looking at. So you can see everything goes inside 60, and then the semis reverse, the healthcare's reverse, industrials, I think was the last one on there that reversed, and then the tech, it was the tech reversed, SPY reversed, Q's reversed, Dow Jones reversed. So everything's a short right here. And then you have super big amount of evidence on the downside. And you can go in there and you can short everything intraday as an intraday guy. So we can gain a ton of evidence with our trades. And in this case, right, goes shorts into lows and then 2-2, take all the money you made short, use their money you just made against them. Is anyone short in here that didn't know to flip long here gets killed? And then up they go. You say it takes a little bit, but since you made your money on the downside first, you can risk yesterday's lows. You can risk the weekly open. You can risk down in here. Because once you take their money and you have it, then you can go off to the races. So it's all about just getting that one good trade where everything works and then use their money and go and multiply it. So that is as much of an answer as I can give. Can learning order flow help with confirmation when entering on actionable signals? No. I would say order flow, you don't know what's actually occurring because when we're tracking the strat, what we're tracking is the buyer taking the offer or is the seller hitting the bid? And we don't have to go into order flow and kind of guess and be like, oh, there's like this footprint chart down here and it shows like there's this aggressive buyer that bought 600 delta on the ES at 5043.25 on Tuesday, and we're gonna look and it's like it's just too much. And if you're talking more so about like order flow as it's occurring, you'll see the things we say to be true actually occurring in the order flow, but you don't need it because everything we know about how price works tells us what's occurring in the order flow just based on continuity. Because continuity, it's not this like just neat little indicator that's like, oh, this like looks like it kind of works and like it has to work because if they're all green, it's going up. What it's actually doing is picking up on algorithmic trading. And an algorithm has to be told a few things. It has to be told what to trade. So if you're trading the ES futures, it has to be told to trade the ES. It has to be told to buy or sell. So is it going to buy or sell and create that position, right? Then it has to be told how to buy or sell. Is it going to sit on the bid? Is it going to take the offer? Is it going to hit the bid? Is it going to go at the mid price? What is it going to do, right? And then it has to be told the most important thing, when to do it. So this is why we separate the groups by time and price, because what we're picking up on is, did they tell the algorithms to trade the stock I'm watching? Did they tell them to buy? Did they tell them to take the offer? And are they doing it right now? So continuity answers all those questions for us. Because if the day is green, they were told, buy, take the offer, do it today, right? And then anytime the 60 is green during that, such as in here on the semiconductors, they were told to do it right now. So they're doing it here, 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 buy and take the offer, do it right now, right? And they're told to do it this week. So we're picking up on the algorithms. And once you get that in your head and you're like, oh, I'm just looking at like the inflows and outflows of all these funds who are rotating in and out of sectors, and these algorithms are pretty much all doing it for them, but they're really stupid. They have to take the offer or hit the bid, and we can pick up on it. Then you can look at the chart and be like, oh, they told them to buy, they told them to take the offer, they told them to do it right now, and here's my signal to get in, and I'm in, there's my winning position. If that condition doesn't change, up they go, right? So super simple, and therefore we don't need order flow at all. This completely covers all of it. And you might be like, well, how do you identify when those really aggressive orders come in? That's when outside bars occur. So like the semiconductors, if we're looking at an order flow here, and if you have let's say you have the software or something to pull it up, do it for me. Go into the SMH and try and pull it up. I don't have it myself. But when this goes 2 up in red and starts coming back in, we actually mentioned the shorts in this stuff. So I can pull this back here. So when this goes gap up, sell, 2 up in red, what it tells us is this uptrend is being countered by a more aggressive seller because they tried to buy it up in the morning, then it flipped red. So on an order flow chart, it would look like they took the offer, and then all of a sudden, a million shares to the sell side hits the bid, right? And that's when the market goes up, and then changing continuity, whomp, takes everyone out. So we can see that as it's occurring, and then our signals cause that to occur. So if we go on like the minute in here, because this happened really early in the morning, right? Yeah, get on those lower time frames, you'll see this. The 2-2 reversal oneer. They had a momentum hammer countered by a 2-2 reversal, which means this is a momentum signal to the downside. Because whenever you counter an actionable signal, such as a hammer, it's momentum. Because they tried, right? It came down in here, someone's sitting on the bid in here trying to get longs. They took the offer, it's going up. Then the 2-2 occurs. Now they're hitting the bid and reversing what price was doing. This would look like a million shares to the downside hitting the bid right here. 2-2 reversal, and then boom, the day changes to red. Then you can see down in here, someone's sitting down here on the bid, maybe some profit taking. Not more aggressive than these guys because the day still red. What'd they tell them to do today? Sell, do it now, hit the bid, right? And then this slight corrective activity, 1 minute against the day, the 15, 30, 60 stuff. Inside bar signal, 2 down, so they're told to hit the bid here. Inside bar signal, they agree on price, and that breaks down, they're told to hit the bid here, and then boom, crater, down they go. And then you can see this is happening all morning. And then right here at 9:30 on the flip, which we say is very important, they sell, make a new low a day. So anyone long into here gets stopped out. And then they start reclaiming morning lows. And then right in here at 9:30, you can see they change continuity on the 60. So the second 60 a day on the semis, what they tell them to do? Buy, take the offer, do it now. And anyone that's short in the morning now becomes a potential losing trader. And you can see right in there, 233.78 changes what we know to be true. Boom, up they go. And then as far as understanding when is that going to change, like how do I know to buy it down here? You simply use the broadening formation to gauge your magnitude. Where when this reverses down here, you know it's trying to go up there. And then if that works, it changes that color of that 60. And we can drop this down to the 5-minute time frames and whatnot. And you'll see that inside 5 minute, boom, right here, buy, take the offer, do it on the 5 minute, changes the 60, they're doing it right now. And then up they go. So we're picking up on the order flow without having to do that. And it's also, there's no guesswork because what we're identifying is what we know to be true. Like if it failed to make a new high, the buyers were not that aggressive. Doesn't matter how good the order flow looked. If they didn't make a new high, they weren't aggressive. If they didn't make a new low, the sellers were not that aggressive, right? So if we go to something like Qs and SPY, you can see SPY in the morning. See how it makes new low a day and then comes back up? So sellers are aggressive enough to make the lows. So it might look really good on like an order flow chart, like, oh, really aggressive seller entered the market. But we know they're buying, taking the offer, doing it this week and today for the most part. And then they negate the month. So we know this is preferred buy. We're nowhere near reversing. If we go to the Qs and compare that, we can see the relative strength in the Qs. The seller in here was way too weak to make morning low. What did they set up? 3, 2, 2 on the 5 minute, right? Their actionable signal long, hammer signal, add to your long position all the way up in here, reduce by half, and then let it go into the close because they're buying this week, today, and right now. And you can see how that plays out. Boom, up they go. And that's all from just right up in here and gauging that relative strength and weakness across asset classes that are correlated. So very lengthy answers here today. I hope you guys are enjoying this. Let's take a look. To use the strat to trade futures, you can. We just look at the SPY. It makes it simpler because we don't trade the morning session pre-market. We don't trade the afternoon session or like the after hours session. So it's like trading the futures, but we're just trading the New York session, which is the session that moves the most. But if we go to the futures, like at ES, for example, we already looked at the weekly signal. Boom, right there, get long, right? And if you're in here, in the morning with the CPI and stuff, which I used to trade this more often, but now I just don't. Don't like waking up that early. It's not worth my time. But you'll see in here, here's your try. And then hammer 15er right into what? Right into the news here, and then boom, off they go, expansion of the try, right on the news. Then the inside 15 add, inside 15, I'm not sure, inside 15 add, and then reversal, reduce by half, and then leave the rest because you have the day, week in your favor. So really simple stuff. I am new to the strat. Watch your playlist, Strat A to Z. What should I watch next? This is something, I'm not sure if it's on my channel or not. So, and this is not beneficial more for me. This is straight up beneficial for you guys. Let me pull it up. But all the strat stuff is free at the end of the day. If you're ever paying someone for a strat course, what you're truly paying for is their time to sit there and coach you through it, or to maybe walk you through trades or work on your trade plan or get some specific advice to what you're doing, which depending on how that's done, it could be illegal, could not be, right? It depends how they're talking about the strat. But that being said, I believe on my playlist section here. Yeah, so it's not there. So if you do join the Stat Discord, the premium section, we have a lot of educational stuff. This is one of the things that is shared in there. But Rob Smith here, he has a strat course, and this is free. And you can see it's a 28 video course, right? And it goes through everything you're going to want to know. It goes through examples, goes through all that stuff. There's some really good nuggets in there. Like literally, if you could give this to someone and that person was determined, believed in themselves that they could trade and decided to do it, this is pretty much all you'd need. So there is that. And again, this doesn't really help me. It's straight up for you guys. If you guys do get a lot of value from us, and I would love if you guys help support what we're doing at Stat. We got a lot of stuff that we're building out with software and courses and whatnot. But that is going to be in the chat for you guys if you're interested. And the last thing I would say is we do have, if you go to stratalerts.com/bootcamp, we have a boot camp coming up on September 3rd. It's going to be a 3-week boot camp. I believe it's going to be $600. The first time around, I believe, was $300 because we said, it was like, it's our first time doing it. Give everyone a great deal, and everyone really enjoyed that the first time around. So we're actually going to have a longer boot camp this upcoming one. We're also going to have more specific focus. We're going to have a lot more time for people to understand concepts, and there's going to be quizzes. There's going to be open Q&As similar to this one, and we're going to talk about developing your trade plan and potentially, I'm not sure, depending on how many people join it, some one-on-one type stuff to get specific stuff answered, or maybe small group stuff. Haven't quite fleshed it out yet, so don't take my word on that. But let's keep it going. And I'm going to quick get a drink here. So how does this work if you can only trade 3 times per week? You need to get on a cash account. The cash account will allow you to trade every day. Your cash will settle overnight if you're trading options. And I believe with shares now, the new standard is overnight as well. So if you're trading a cash account, you can trade every single day. But the only thing is you can't recycle your money. So if you spend $500 on a position and close that, you cannot trade that $500 until the next day. And whatever profit you get, you cannot trade that profit until the next day. So it has an overnight settlement there. With futures, it's instant. So if you're someone who's like, I want to trade every 5 minutes and like really get in there, futures is good option. If you have $25,000 or more, which I know a lot of people are new to trading here, maybe you don't have that, you can get around that PDT. There's also some offshore brokerages and stuff where you can get leverage and get around PDT as well. Not going to recommend those myself, but there's a lot of ways around that. Specifically, the cash account is the best and safest way to do that. So even if you're trading with like a couple $1,000, you can totally do it. If you're trading $500 cash account, you can totally do that there too. How does the strat help with swing trading? Well, we know signals in force overnight are swings. So a 2-2 week is in force Monday, overnight on Tuesday, overnight on Wednesday, overnight Thursday, into Friday, and then not over the weekend. So this weekly signal all week, you get to swing it long, right? And then anytime you're in there taking those 60 signals, like we pointed out, and this is the future, so it's going to be slightly different here. If we just go to the 60, you can see, like, for example, if you're following our risk management, RevStrat 60, 3122, that's an actionable signal, hammer. Right here, you buy it, it goes instantly, risking a few points. Yeah, so 2.25 points. No one's going to do better than that. And then up they go. You can see there's your 26-point gain. Right up here, you reduce by half. Reduces your cost basis 26 points below your entry. So now you're down into here with a winning position. Unless it drops 26 points, you're a winner for sure. So therefore, you get to swing and hold the rest of the week. So it's really simple. And the reason it's great for swing trading is because not only can we look at the week and month charts, but we can look at the quarterly and yearly charts. And if you knew about this on the yearly, specifically on the SPY, which we mentioned at the end of 2023 as an actionable signal here, 477.55, right there. You knew that was a buy. So when this 2-2 week occurs, you get the position, right? Until that reverses, you hold it. And then right in here on the year, you got the rest of the year for that. And then next year in that exhaust, potentially, crater if they're going to rev strat the year. But same thing with the outside year here. Anyone that did not know to expect that crash in 2022, we called the top. Goes 2 up in red right here. That's a potential 3. Goes outside bar. The short is done, right? And then it flips green in here on the year. You got all year to be long. So continuity allows you to understand how long do you have for that trade to work out. Signals tell you how much evidence do you have this week or this month or this quarter or this year that that's happening. So very useful for swing trading and understanding what a reversal looks like as well. Because if you bought a 2-2 day here on SPY, did not reverse. You had the inside bar add right here and it did not reverse. So 2 up, 2 up, 2 up, 2 up, or 2 up, 2 up, 1, 2 up again, confirm add, 2 up, 2 up, 2 up, 2 up. And some traders, when you get good at this, they might be inside bar add, and then 2 up again, add, all the way up in here. And we do that using those lower time frames to manage that risk, but very good for swing trading in that sense. How does the flip work if you have SPY on extended trading hours? And then the flip is at the top of the hour, which also equals the futures flip. Just wondering. You're just looking at a separate 60 group. The reason we use the bottom of the hour is because news events normally occur at the bottom of the hour. But we also do track it. We call it the sideways 60. So the normal 60, you'll see it opens at 8:30, 9:30, 10:30, 11:30, etc. And we use this one because news events will normally occur at the bottom of that hour. But we can also then, if we're looking at the ES, it's going to track the sideways 60. So it's going to look like a completely different chart in here this morning. But it's going to be, you can see, so this is the open up in here about around 8-ish, right? So it's tracking a different chart. So it's going to look completely different. But you can double your signals if you're looking at both of those 60s. So you get double the amount of 60-minute signals to create winning positions on and then hold them with continuity. So that's the only difference. But again, we suggest the bottom of the hour because of news events. And specific news events, it's going to be like, let's see, for example, you can see this morning right at 7:30, that's the 60 flip on the futures. And that's the bottom of the hour flip. That's when the news occurs. That's why we use the bottom of the hour. And it goes 3-2 on the 30-minute, hammer signal and force right there. Buy it. Then up they go. If we miss a first good entry, even if we enter in reconfirming signals, we get stopped out. How do you avoid that? As we've shown here, do your battle. So the strat, we know if things are working or not. So if this week is really green and it's working, you go and do battle in there. Meaning if you get stopped out 1, 2, 3, 4, 5 times, that's fine. Since we're using tight stops, won't be a bad thing. Because let's say you stop out and your stop's a little wider. Let's say it's 5 points on each futures trade you take. If you stop out 5 times, 25 points, right? Now, when you get a winning trade, let's just say, for example, it was this inside, or let's just go to SPY, since that was what we traded today. In here, once you get that winning trade, and on SPY, we're normally risking like no more than like 30, 40 cents. When volatility picks up, maybe it's slightly more, but when this hammer goes in force on the 30, you get to hold that all day, and you get to add to it. So when it goes $2.69, if you stopped out 30 cents 5 times, which would be like $1.50, you make it all back. So when we're learning the strat, we suggest really tight stops because it's better to stop out super tight for break even or maybe like a couple pennies than it is to grind your account to zero and never be able to trade again. So very important to do that. But when you're doing this correctly, the signals, they just go. Like there's not really often where the signals don't just go unless you're chopping stuck inside a range, which is something we identify. So like, for example, we get the 3-2 hammer here on SPY, buy. 2 up in red, reduced by half. Your cost basis now is at low a day. So you can hold that position. And therefore, you don't have to stop out when it comes to break even. But what you'll notice is the broad information looks like this, right to left. So this is your broad information. You'll see the hammer goes in here. It doesn't really go anywhere, right? It's still going up, but there's another hammer here. Works, right? So you make the winning position, flips red and inside in here. Maybe you reduce by half or you get stopped out, so be it. But at this point, you're stuck. You can see they're failing to take the highs, failing to take the lows. Whereas in the case of the previous signal, notice how this signal occurs at the bottom of the broad information drawn right to left. So we could say 2 up, 2 down, and then the new day opens, pokes down, bottom of the range, and then 3-2 from the bottom of the try to the top. Most people, what will happen is they will see this happen. This will come in here. And then once it starts chopping up in here, you can see it's doji, doji, doji. They're trading, getting killed. And then it goes up, then it goes down, then it goes back up again. You're getting murdered. Why does that happen? Because you're not making new highs, you're not making new lows. And the best moves are going to be when price takes out the low here and then reclaims back through a previous range to take the high, which is why we want to, when we identify a signal, draw the tryout, right? So when this 2-2 week is setting up on SPY over the weekend, we draw that tryout, like here, bottom of the try. So when this goes 2-2, we're going to the top of the try, right? Whereas if we go and look at, let's say in here, when this goes inside bar up, it is bottom of the range, but we're still mother bar to this. So you can see it goes up, it goes down, it goes up, it goes down in here. It does close as a hammer signal for the next week. So when that goes in force, notice how it's no longer stuck in that range. It takes out 5, 15, 3. We call this the mother bar, where these 2 bars were stuck inside of that, causing the up, down, up, down, up, down action. And then once it becomes 2, it's trend, 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 makes new all-time highs. 2-2 reversal hits its magnitude. And then 2-2 reversal here from the bottom of the weekly try again, which you can see is drawn out in here. These 2 bars are outside of this. Goes 2-2 and then trend, 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 trend. 3 reversal, get shorter or get out or reduce, whatever you're doing, right? So you can see when you're stuck inside the previous range, that's when you get killed. And same thing will happen on like inside days, inside weeks, inside months. So we always say we want to know, are we stuck inside a previous range at this point? So whenever you see an inside bar while you're trading, you have to be extremely aware of that to either not trade or be very aware that it is inside. So you can see SPY in here, 2 up, 2 up, 2 up inside 4 hour. This is where you get killed. 2 up, 2 up, right? And you might look at that and you'll be like, well, every 2 up here starts inside. And it's like, yes, that is true. What we want is we want signals that have a magnitude to cause this 2 on the higher time frame, right? So in the morning, when this is 2 up on the 4 hour, we're buying it, right? And then in here, it does open inside bar, but there's going to be signals in here with a magnitude of high a day, which cause the 2 up 4 hour. Whereas in this case, there were some signals nowhere near making high a day, and they did work for a little bit and then get stopped and they start chopping out or chopping up. That's where you get killed. So very aware whenever you're inside a higher time frame, that's when that chop shop's going to start. So we want to trade in the direction of the most 2s and 2s going 3. We never talk about trading the direction of the 1s and 1s going 1, right? So hopefully that answers your question there. And as far as getting entries into signals that are working, we've already covered so many ways to do that using the 60, the 15, the 30. You look for, like the week looks really good, 2-2 week in force, go on the 5-minute, draw the 5-minute try out. Once you get a signal down here, buy it back up. And it's that simple. So like SPY, if we go to the morning session, 2-2-15 down in here, coming off the bottom of the try, which we got like a 2-day chart. We'll see this a little better. So you see broadening formation, poke up, poke down, 2-2-15 here, get long, all the way up into here, top of the try, 2-2, reduced by half. So you this is going to get you into the 2-2 week that you did not get previously. And this is why we talked about confirming and negating, where this 15 reversal confirms the weekly signal. So if you didn't take the weekly break, this break right here is the same thing as taking the weekly break because it reconfirms the weekly break. So this whole week, every signal that's confirming that, it's a potential long entry. But we don't want the ones that are going into new highs. We want them slight lower low and then back through previous range. And what we say is we're looking for a triangle layout where we cause that broadening formation, It's like it's chopping around, pokes up, pokes down, broadening formation, signal, and then all the way back through. What most people do is they see it rallying into the highs and they're like, I gotta get long. And they get long, maybe they make a little and then it reverses and then whomp, takes them all out, and then makes a slight lower low and then it goes off without them. And they're like, what happened? So we want to wait for the stop out first and then go for it. Get a list of all those sectors. I mean, just go back in there and you can get that straight from here. You can get it from this right in here, which is an indicator that shows things that are two up or two down on the day. In this case, I think this is like a monthly chart or a monthly, yeah, so we go on the day here. This is the list of all the sectors we're tracking. So you can see when we talk about evidence, notice how much evidence you have. IWM, Dows, Qs, SPY, communications, all the semi or all the tech, all the sectors besides real estate, utilities, and gold. So that was today, and that's how we knew it was a definite buy today. So how do you play a ticker? If you mark it up trigger levels the night before and it gaps up or down during the open, your setup turns into a significant gapper. Does it negate the chart? Nope. When we're doing that, what we need to do is drop time frame. If it's a gap, it's occurring on news. So you want the 5, 15, 30s, maybe the 1, 2, 3 minute once you get good. Or you can trade continuity entries, which is what we mostly talk about. We had Cisco, for example, today, right in the morning, and you'll see this. So right in the morning, this goes, and right in the morning, it goes slightly red first, which is what you have to wait for. If it's a gap up and you're trying to buy it, it must go red first, and then when it flips green here, you can long with a risk manage to low a day. Because anyone that's initially trying to short that, they're getting blown out above this. And the week is green. The month at that point was green. You can see this one. Month was green above its open, and it gapped from being bright red on the month to bright green. So this is all those shorts on the month getting out right at the open. Then that's how you create that position on the gap without a signal or without, I guess, an actionable signal in that case. And you can see in this case, this is why we don't prefer to buy a gap up straight off the open, because it goes initially for 4 minutes, which you can make a lot of money doing, like 487 to 534 or 534. Once this reverses here, the low a day is in jeopardy, because if you're long into the gap up and it starts coming back in, anyone that's buying this gap, now maybe they're getting out, right? And then if it takes out that morning low, the gap up buy turned into gap up sell, and all these buyers in the morning are now underwater, because not only is there shorts exiting, but there's buyers in here trying to buy it with the good news. They're like, wow, Cisco killed its earnings, I'm going to invest, right? And then it goes up, and then they come back later in the day and they're like, well, I'm down 1%, and then they close, and that's what's causing this big move to the downside on gaps up. So if you go to like TPR, this is what we're looking for on a gap up ideally. Goes green first, right? So we don't buy that, and then flip red right there short. And this is caused with a 2-2 shooter 5 minutes. So they go up first, trapping the longs, flip red, shooter signal right there. We mentioned that in the morning. We also mentioned the inside bar add. Then we mentioned the 225 recover at low day during the morning stream. This is called sector strength. It's something I made myself. You can check it out in the scripts and scans channel of the Strat Discord at stratalerts.com/discord. And you can use multiple time frames, and it's super useful because it gives you like just this really quick view of what's happening. Because if you get on in the morning and this is what's happening, it's like, well, it's a buy, right? It tells you exactly what to do. You said September, what day for the boot camp? It's gonna be September 3rd. Two or three are top setups. All right. There's a question I like. So the first one you're going to want to know about is the inside bar reversal. And we call this a rev strat or a reversal strategy. So most people, when they learn how to trade, they're trading like it's consolidating, it's going sideways. And then it breaks out. And I'm a buyer when it breaks out. And everyone's taught this thing. And throw it in, like in the chat. Have you been taught to buy breakouts, right? That's like the first thing people are learning. Like there's a cup and handle breakout. There's a head and shoulders breakout. There's a this breakout, that breakout, right? So we want to do the opposite of that, because when the breakout occurs, we know everyone's long. Everyone's stops are right where the breakout occurred, because once it's breaking above the highs, they're like, this chart looks amazing. And we would say the same thing. If it's a breaking above the highs, it looks good. But then once it comes back into that range and changes the continuity, coming back below that breakout level, at that point, whoever bought up in this stuff, they're in a losing position. They just bought the breakout and now they're underwater. So they sell. and then it comes back into the range. And anyone who's buying in that consolidation also is forced to sell. So we call it a rev strat, and it's a 1-2-2 or a 1-3. So for example, we can go to GDX, I believe. Yeah, so this. So it goes inside bar, right? Gap down buy. So this is a breakdown of this consolidation. And then right in here, when it reclaims this inside bar, this equilibrium, now whoever is short into this stuff, they have to become a buyer, right? So you can then see when you go on a lower time frame, the 3-1-2 up and then momentum hammer up causes this. And then today is another momentum hammer. And so these signals are going to cause anyone short in this range to experience a loss if this weekly does not reverse, right? And if it stays green for us. So this is something we're looking for, the Rev Strat 1-2-2. And a great example is from the weekend video on Monday night's nightly video. We looked for Rev Strats because on the decoupling of the day and week opens, we always look for Rev Strats. We look for some other setups we're going to talk about. But you're going to see the 1-2 down hammer. So inside bar breakdown, the sellers tried to sell it, and they did because it broke down from an equilibrium. So equilibrium, they agree on price, and then it goes to the downside. Reclaims, anyone short in here, they have their stops above this. They have their stops above this. They have their stops above this. And we have full time from continuity up right there, 124.57. So that's a buy instantly. And then how do we manage that? Well, we hold it all day. 2 up in red in here, we can either reduce by half or just keep it break even. And then it's still good as the day has not reversed. You'll see we have the same condition on the month. So we're compounding our signals across multiple time frames. So you can see the 1, it breaks down. They tried to short it and then countered by a more aggressive buyer. Rev Strat right there, 112.45, up they go, right? So most powerful setup. And what we say is when a Rev Strat occurs with full time frame continuity, there's zero reason that should fail because we have someone that's getting countered by a more aggressive participant. And we also have full time frame continuity, which tells us every participant is a buyer or seller. So if you're interested in Rev Strats, after hearing that, you can go and check out the StratAlerts site, app.stratalerts.com, and we can scan these every day. And this could be the only setup you trade. Some people only do this, and they make more than enough money trading. So what we can do is we can scan for the 1-2-2 Rev Strat. We can scan for them in force with continuity. I'm not sure if we had any today. I wasn't trading much today. You can see, so we didn't have any today. For you on the week, you can see, boom, here's all your Rev Strats this week. Notice 7%, 4%, 3%, 5%, 6%, 1%. And then there's 1-2 that failed, but they're still green at this point. So when we go to like Apple, this is something we talked about on the weekend video. Did we? We did. Inside bar, boom, Rev Strat, right? If we go to car, inside, nope, that's actually not a Rev Strat. So we might have a data error in here. Some of the data is just not perfect in there. But EMPH 3-1-2-2 Rev Strat, boom, going to try and take those guys out, right? And we can just keep going through this. Let's go MSCI 1-2-2 hammer Rev Strat, countering a shooter, boom, up they go. If we go to Visa this week, you see the 1-2-2 hammer Rev Strat, up they go, right? So that's a really good signal. The next signal we really like is the 3-2-2. Dow Jones is the example of that. Why do we like it? The 3 is a broadening formation. It has to be quantified as such because it made a new high and a new low, so you cannot refute that. Everyone that says broadening formations don't exist is wrong because the charts tell us they do. And then since it's a broadening formation, we know these will function as levels of reclaim, similar to the equilibriums. When it breaks down and reclaims that 3, if it's going to broadening formation, which we know price does because the 3 occurs, it's going up there. So you're going to have a bigger magnitude and a reversal back through the try. So when it goes 2-2 here on Dow Jones, 39655, it's going 412. We know that for sure. And unless that day reverses, it's not going down, right? So the inside bar up, which we showed with the 60 signal to cause that, 60 day and week signal at the same time, boom, 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 up they go to there. And those are the 2 favorites. You can also see an example of a Rev Strat in here. The 1, poke up, fail, boom, Rev Strat takes them all out. And you can see a somewhat of like a delayed Rev Strat, we could say. Inside bar breaks up, and then failure right here, boom, takes them all out, right? So Rev Strats and 3-2-2s, hands down, going to be the best things to trade because you get bigger magnitudes, you get a good evidence of either a broadening formation or a potential broadening formation with the Rev Strat, and you know that participants are getting countered because 3s show aggression. We know this aggressive seller in the Dow now is forced to cover. And everyone's like, oh, we've got low volume. We're going up on low volume. Everyone be worried. It's like, nope, this seller in here, they're getting screwed. If it's on low volume, they're staying short. So when we get up there, they're going to have to buy even higher, and it's really going to blow them out. So that is the two favorites for me. We will commonly refer to inside bar equilibrium breaks as well, which is just what occurs before a rev strat. So if an inside bar breaks and fails, that's the rev strat. If it breaks and succeeds, that's just an equilibrium break. But those are my two favorites. And you'll hear us refer to them. We'll say like 3-2-2, fun to say and fun to do. And this is why. Same with the rev strats. We don't quite have a good rhyme for that one, but hopefully that makes sense. What is the name of the TO? We already got that. All right. Is there a major difference between day trading and swing trading? No, not at all. Anyone who tells you different is wrong. Because what we know to be true is occurring across the year time frames all the way to the 1 minute. Swing trading, all it does is slow it down. So, like at a weekly signal, when this goes 2-2 week, it's the same thing as taking a 2-2-60. It just takes a week, right? So, as long as it's above that, you got all week. The same way if this occurred on a 60-minute, like the semis did on the 3-2-2 in here. Or actually, no, semis is not a good example. Qs is a better example. Like this Qs, 3, poke down, reclaim, right, back into the 3. And then 3-2-2 right here into magnitude, taking the other side of the broadening formation. And this is an example of where you get the winning position, but it doesn't stay up, and then they chop them up and kill them because they're stuck dead center of this try. But you can see this is the same thing. You buy it above that. If it's green, it's still good. If it hits its magnitude, starts coming back in, you have to reduce by half or fully exit. And then if you're looking at a weekly chart, it just takes longer to do. And when you're trading weekly signals and stuff, maybe your risk management is slightly different. Some people, they'll buy it Monday and then they'll keep a stop maybe on Tuesday's reversal against Monday, or they'll keep a stop at like the 50% of the previous week to try and give some more time for that weekly participant to kick in and start slamming it back through the try. I guess the only other thing is when you have weekly signals, since you have multiple days, you have all week to add to that signal. So instead of just taking the one weekly signal and buying and just holding, we want to take the weekly signal. Once that starts working, add to it, add to it, add to it on additional 60 and 30 signals. If you can't do that, then so be it. That's fine. Some people have jobs, right? And like you just get an alert, you're like signal's breaking, good, gonna take it. Here's my stop, blah, 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 and you let it go. Just depends on what type of trader you're gonna be. And the same thing applies to like quarterly, monthly charts. So when we look at, you can see 3-2-2 on Adobe, fun to say and fun to do above that. The weekly signal you get in, and then if you're a quarterly guy, look at the 3-2-2 quarter. It's about to re-trigger. So we can use the week to get the quarter going and then add when the quarter goes in for us because it gives us more evidence and then the magnitude gets bigger up into here. So it's the same exact thing. You're just creating bigger time frame positions. And you can see it works exact same. Shooter off the highs, down they go, 3-2. Notice the rev strat, 1-2-2 quarter, boom, right? Boom, boom, takes the highs. All the way down, inside bar signal, up, 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 3, poke down, back into the 3, and then we'll see if it gets going the rest of the quarter. We still have some time. And when you go to the big time frames, you're looking for big broadening formations. So we go to meta, you'll see this. Poke down, right? And this should be blowing your mind right now if you haven't seen the strat. You'll see this hammer signal on the quarter, 2-2 reversal. Where's it going? Up there. From the bottom of the try to the top, because if this doesn't reverse, that's the magnitude, gauging it properly. And then you can do the same thing, adding on signals. So you can see in this case, 3-2 on the month, it's a 1-3-2. Goes up, the 3-1-2, which does make the new highs, then I believe it came back on some earnings. And now we have a 3-2 reversal at the all-time highs, which we'll see, maybe it does, maybe it doesn't. But meta this week, you have the 2-2 week up in here. Do you set up alerts, or how do you keep an eye on all the stocks you're watching for the day or week? I have a pretty neat setup. I'm not quite as crazy as Rob was with like a million screens and whatnot, but so like during the day we're always talking about the chips because they're the best sector this whole year, right? So I have all the chips up. These are all the ones we trade, and that's how we identify simultaneous breaks. Or AVGO sets up the hammer, AMD sets up the hammer. You're gonna see in here, I think it's down here, NVIDIA sets up the hammer. Marvel sets up the hammer, MU sets up the hammer, right? So all these things are doing the same thing. And then we also see some kicking patterns on the day in ON, 2-2 reversal, QCOM, Anyone short yesterday and they're just having problems. 2-2 reversal and ADI on the day. So we're tracking all of that at the same time. And then anything we're trading this week, I will keep track of on a list in here normally. So like we'll have the gappers list, which changes every day. And then during the day, I'll pick out the things that are moving intraday so we can create positions on that stuff and pick out observations. So maybe it's not stuff I'm trading right now, but it's stuff where like the week's going in force or the month's going in force and it's really moving. So like it'll go on here. And then I have other screens and other charts where I have like different things. So like tracking all the sectors and I just memorize it. So like I make the weekend video, I have it all in my head. And then if I see, let's say health or let's say semis I see going, I'm like, oh, NVIDIA is a 2-2 week, MU is a 2-2 week, NXPI is 2-2 week, SMCI is a pretty high volatile name, so I'm gonna check that. So whenever we see stuff intraday, we're creating positions, and then we just check the week and we're like, oh, we can hold it, right? It's still a signal in force, and then that's that. When it comes to like nightly videos and signals, to be frank, sometimes I'm not the best at keeping track of those signals. I normally pick a few of my favorite. And in the nightly videos, you'll hear me. I'll be like, I really like this one, really like this one, really like this one. And we're going to focus on those specifically. And then here's the rest. So you guys can pick your own. And then during the day, we're using the scans. So the scans completely automatically keep track of everything we're doing. So at the beginning of the week, when we set up on the nightly video or weekend video list, where's all the weekly signals? Well, there's 100 and however many, 300 stocks setting up 2 weeks. It's like, okay, we go into the week, we go in force on the week, we go 2 to the upside to give us the bullish signals, and then filter, and it's like, boom. And then we're like, okay, tech and semis have been really strong intraday, showing us that there's more buying occurring in those sectors. So we can filter by tech, and boom, 66 tech. And then I can say, I want the high market cap ones that are more volume, more liquidity. Boom, here's all the liquidity in the tech. And then in the future, the very near future, we're going to be able to combine this list with scans intraday, where we can scan and say, we want exactly this. And there's going to be a plus button where we go plus, and then we can set up and be like 60 signals setting up, or daily signals setting up, or daily signal in force, or whatever we want to look for. So we're going to be able to do that, and this will track it automatically for you. It tells you if it's in force, it tells you if it's hit its magnitude, it tells you the first pivot target and the second pivot target, it tells you if it has a pivot machine gun, if you know the strat, and it'll also tell you the type of signal. So 322, fun to say, fun to do, Adobe right there. And then any 2-2s in here, right? 2 down, 2 up. And then 322 CRM in there, fun to say and fun to do. And then you can sort it by how much it's up on the week. So AVGO is this huge gainer on the week, and it goes 10%, but it must go 5% first, right? So early in the week on AVGO, when we recognize that this is up 6%, we go to like the first couple days here. So you notice they bought Monday, came back Tuesday to buy more, strat attack. So it's up 7% on Tuesday. If it's going to go up 20% this week, it's going to go 7% first. So we know then, come Wednesday, Thursday, Friday, we're going to go after that one because it's sticking out like a sore thumb with double digits or much bigger gains compared to the rest. So we're trading the strongest names. It automatically tracks it all. And then each 60, each 15, each 30, we're checking back on all these lists, all these charts. And intraday, we can do the same thing. So I can look for, let's say, a 60 signal. And going into tomorrow, let's just say it's a hammer 60 in force or setting up. So I can look for hammer 60 on tech. And then right now we don't have any. Maybe we got 2 down in greens. Do we have inside bars? I'm just trying to find something that's going to show up in here. So maybe it's not. Maybe there's just a lot of 2s in tech to the upside at the close. I don't know. Yeah, so Q's went outside bar at the close. So maybe we can go like this. Current candle of 3. Potentially, it just doesn't let me scan the 60 after hours. I guess I haven't tried to do that. But during the day, this will populate as lists so we can scan prior to the flip and say, where's all the potential 2-2-60s that are 2 down in green? Maybe a rev strat, maybe not a rev strat, with full time frame continuity in the tech sector. So it gives you the whole list, and then you can go in there and be like, oh, I know that one from the weekend video. I know that one from the weekend video. Alex talked about that one on the strat attack, and now you have 3 stocks for the next 60 flip, and you buy all of them. And you can do that as big or as small as you want. We always suggest people nail down to either one setup across all the different stocks or maybe one sector, not sticking on the same stock per se, although when things are really moving, you can do that. But hopefully that answers your question. I kind of went off a little bit there. Yeah, he traded. Sorry, I don't want to skip too much. When can I learn about lower time frame reversal and trigger continuation? That link that I posted in the chat, if you scroll up, that will teach you everything you want to know. And if you want teaching from me and Sarah in stat, and you want to do the boot camp where it's 3 weeks of live classes where you can chat with us, maybe some small group instruction, and talk to us on the live streams, ask us questions during the day before you make trades and all that type of stuff, you can check out stratealerts.com/bootcamp. That'll be September 3rd. Actionable bull indicator. If you go to Google and you type in the Strat Suite, Think Script, you can go in here and this will have all the Think Script indicators that are made by Pellin Sachs in here, and he's got a ton of them. He personally made a few of mine, like the Flex Grid in here, which currently I'm not using all these indicators. I don't quite need them anymore, but they can be useful for some people. Mine just kind of looks like this now. And all this tells us is the 60 a 2 up or 2 down? Is it green? Is it red? And that's about it. And then these actionable signal stuff is telling me of rev strats, kicking patterns, which just means bright green or bright red. Is it kicking bull or bear? And then signals and force. So it's pretty simple stuff. And that's all coming from here. Just Google that. Do you look for the morning try every day? Yeah, we call it the good morning try. So you get on the morning and you're like, all right, I'm just going to wait. And it's like, oh, good morning. And then you get trading, right? Not every day are you going to get like a perfect one per se, but we're always drawing out the tries on the 60. We're drawing them out on the intraday, like 5-minute groups and stuff if we're tracking that. So like, for example, you'll see this is the 60 try. This was when the puke started. So pokes up, top of this. After poking down here, there's your broad information. Rev strat. Is that something we just talked about? We did. This occurred with full time frame continuity down, 469.56. Or actually, no, I think the weekly open was slightly below that, but it negated the week to full time frame continuity. So this happened here at the top of the try. And then you'll notice in the morning, this is the good morning try because this occurred on the second 60 of the day. So we go into like the 5-minute back in there. You'll see the good morning try. So this was the previous one from the previous day. Slight higher highs, slight lower lows, right? And then right in here, 8:30. So you can see 3 broadening formation, 2. So that broadening formation grows, goes into the highs, you draw right to left. So this is how big that range is. And then up in here, the 2-2 shooter counter hammer. This is a momentum signal as you are countering an actionable signal here. And that reverse is high a day. On the 30-minute flip, changing the control intraday to the 30-minute group against the first group, which was the daily group. So right here, it changes. Inside bar down, add. So we go small at the highs when we have less evidence. The day is still green and all that stuff. Add on the 5 down. The day goes red below this, add on that. And then it goes into the bottom of the try, and there's your good morning try. And if we're going just off of that day's action, this is your 3. So broadening formation gets bigger, and that's up into the highs, and then reversal back into that. So you can see it's pretty much going to happen every day because it has to. And the reason it has to is because whenever price reverses, like for example in here, so price goes 2-2 reversal to the upside. It made a low and a high in here. So there's no slight lower low, I don't believe. Yeah, so this is going to be equal lows or maybe slight higher low in here. But goes into new highs, right? Recent highs, high a day. 2-2 reversal, what's it trying to do? Magnitudes to take that out, which would cause a 3, and that'd be the good morning try in the Qs. So then your try looks something like that. So anytime price opens, unless it goes up all day and does not make a 2 to the downside, it will create a broadening formation. And therefore, in the morning, we can wait for that to set up. What will happen is when we have an expectation of a big move, like let's say you get a daily signal, maybe in the morning it just goes and it just flies, right? When you have a lot of evidence, kind of like if you go to Dash on that daily rev strat. We can go zoom in here, and I'm trying to go quick so we can get through all the questions. I don't want to leave anyone hanging. But like right in here, you see hammer, 15-minute, boom, takes the daily signal. This is kicking that daily broadening formation into gear. So the daily try, we're drawn right to left, looks like this. So we're just looking to take that high out, right? And then once it does that, boom, there's your try. So it's not on this small time frame because it's a daily signal. We look at the daily try, their daily broadening formation. Then once it's up into here, it goes inside bar, add, which causes what? Expansion of the range. It gets bigger, 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 bigger. Then you can see the 1-3-2, which is a rev strat or a form of a rev strat, makes new highs. Then they come back in and notice too weak to make new highs here, so they get some profit taking. And they stop out anyone that was tight stop guys in here. We're still nowhere near the bottom of this range, and we also know the week and month are still green. So we want to get back longs. And you can see this is 8:30 in the morning. They go outside bar. That's the good morning try right in here. So here's your try, gets bigger, expansion, 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 like so. And then right here, 2-2 back in, inside bar against, reduce position by half, put your stop at low day here, and now you're into the weekly signal, and up they go. And then you can start playing back through this try the next day. So when I was like first learning the strat, this is something that really helped me is first learning how to draw it. You draw right to left. If there's an outside bar, that's the broad information, and it will expand and grow over time. And then go and learn how to do that. I have some broad information videos. If you search like Alex's options, broad information, they should come up. Do that for like 100 stocks every single night. And then the next day, go through that same 100 stock list, leave all the drawings on your chart, and you'll see kind of how that functions all together, because this happens in every single chart. It has to make the broad information, it'll fail one side and it'll take the other side out. It happens all the time. So once you start seeing it, you can have a lot of confidence in what you're doing. And in the morning, you can then seek this out. If we go to SPY just today, you can see, first of all, here's this nice 1 minute try at the end of the day, right? So all higher lows in here, which means you're going to get the lower low eventually, right? And they come in and boom, lower low, and then rev strat oneer. You can see this is why the signals are so good to know. 1, 2, 2 rev strat right here, boom, back through the previous range, right? It's obvious once you know this stuff. If we go to the morning, it should be really obvious. Outside 1 minute, there's your good morning try starts. Right, then poke up, poke down, gets bigger over time, poke up, shooter off high day. Where's it going? It's trying to go to low day, redraw. Then makes slight lower low to low day, redraw. And then reversal. This is a rev strat back to the upside. Did triangle out, and then 2-2-1er to get back in. And you can see it goes back to the highs. And then all day, you can see they're riding into the top of this try. And then they will form additional broad informations. You'll see them everywhere. The ones we want to know about are the big ones. So once the range is like $5, start drawing that out. If it's like, if we go in here and it's like this stuff, you can draw this out, right? You can say, here's your try, here's my signal, hammer right back through, boom, up they go. But you're going to drive yourself nuts if you're doing that, because you'll have that one, you'll have this one up in here, and then you're going to redraw this one, which you can see is like the bigger try. Then you're going to have this 3 on the oneer, there's another one. Then the 3-on-2 reversal, up where are they going? Up there. Then the expansion of the range, up there, top of the try again. And you're going to see another one, pokes up, pokes down. There's your 3 stuck inside. This 3 get chopped up, down, up, down, right? And then pivot machine gun through these guys. Inside bar breaks below this stuff. Boom. Momentum shooter, boom, boom, boom. And you can see at this point, we have a ton of lines on our chart. So might drive you nuts doing this. And this is why we suggest using higher time frames, because you don't have to like get in there and like every minute be like, gotta draw, and like everything's changing every minute. But you can. Some people will do that if they're scalpers, specifically on like gappers and stuff, where if we go back to Cisco in the morning, once this thing starts forming that try and you know it's a gapper, you can expect higher volatility. So in this case, they make lower high, higher low. So you can see all this action stuck inside, right? It's going to form the broad information within that. So they slight lower lows, slight higher highs, slight higher high in here, inside bar signal off highs, boom, down they go into the lows, and you can play it right off that stuff. And that's a percent in, 10 minutes, right? So, and then once it's out of that, you can see they're just grinding. This is now resistance against all those guys who are potentially trying to buy in the morning. So hopefully you can see that. There's a lot of drawing of the tries and stuff you can find out on my channel. Okay, I love this question. I'm not trying to be mean here, but this is how I say it, right? Volume is irrelevant to future price direction. What is relevant is not the volume, it is the aggressiveness of the buyers and sellers. So Cisco in here, this could be trading 1 billion shares every second in here, right? But if those shares are being traded at the mid price, it will open as a doji, because volume is not relevant to future price action or current price action. The only thing volume will do is it will make bigger or smaller candles depending on how aggressive that volume is or how aggressive those buyers are. So when SPY is trading up this week and everyone's like, it's going up on low volume, it's going up, and then it's up $20 this week, they're all wrong. Obviously it doesn't work and it doesn't matter. What matters is how aggressive is it? Because it could be trading 5 shares every minute, but if those 5 shares are being traded $10 above the offer because they're just trying to get it in and just fill shares, it's going to go up, right? Now, when we're talking about strat, do we not reference volume? We only look to volume as a usage of liquidity, because that's what it tells you. You can't quantify it any other way, because people will say, oh, it goes down, and then the volume spikes, and it's capitulation volume. Every blah blah blah, capitulation volume. Now it's going to reverse, and then it reverses, right? And then they'll say it's going up, and the volume's too low. There's not enough volume. So which one is it? You tell me. Is it not enough volume, so it shouldn't be going up, or is it there's too much volume, so it should be reversing? Two contradictory ideas that do not function together because volume cannot be quantified when it comes to price action. Now, can you use volume intraday like as some type of tool if you say? Yes, but don't rely on it. There's like examples of using volume, and I don't use it at all myself because it's just not useful. But what you'll see is like intraday, you'll get volume spikes like at the highs and lows, but really all that tells you is like, oh, you stopped someone out, or oh, everyone just bought the breakout. It's like we already knew that because it went into new high day, people bought the new high day, and people stopped out at high day, which is why you see it go into the highs, it'll spike up and then come back in and then take the other side out. So it doesn't really matter as far as volume is concerned, only for liquidity purposes. And what we say is if our analysis is correct, the volume will show up, right? So I don't know if I have an example of that. Let's just say, just because it's a good example of a chart with the broad information. Meta, right here. Capitulation volume. It's a big spike. It's at the lows. Everyone's short. It should reverse, and then it doesn't. Why didn't it reverse? Because it went 3 on 2 down, and then it went double inside and down. So it's not going up, right? And then, oh, big spike, capitulation volume. It should reverse. And then it reverses, and they're like, it worked. Why did it work? Because the 2-2 month never got reversed against. So can't say anything about volume in reference to price action besides do you have a lot or not, and it doesn't matter. So hopefully that answers your question. And I know some people disagree, but you simply can't quantify what it means. And I'd like to see someone try and prove that. You're an absolute gift to all of us. Thank you. And I promise you, I'm really not that smart. I talk fast. I learned this all from Rob. I spent countless hours learning everything I could from Rob and watching a million trading videos to learn everything. So I can pretty much answer questions about any strategy you want. But this is the one that we're ended up on because this is one that matters. The PMG setup and how to play it. So what a PMG is when price is making consecutive higher lows, and thus you get a pivot cluster or a cluster of pivots. So I don't know if I have an example of it. Let me see. CVX on the daily had a good example here. So here, this is what a PMG looks like. So notice it goes 2 up, 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 go. Right? So it just keeps going up. And we say consecutive higher lows. So higher low, higher low, higher low, higher low, do. And then reversal. What just happened? Price is now no longer going up. So anyone who wanted to be short, they got blown out because it's just been going up, right? And anyone who wanted to buy long, it's going into recent highs or new highs. So they're long because they bought it, up 7%. So you had 7% of price action to find a long. If you're an EMA trader, you're long. If you're an SMA trader, you're long. If you're trading market structure, you're long, right? So everyone's long. It doesn't matter what they're doing because it was going up, right? So we can quantify that and say everyone's long. And anyone that was short is blown out because they can no longer be short against 163.90. So when this goes 2-2, shorts can re-enter the market after being sidelined and blown out of their short positions. Anyone who was previously long is now forced to take profit, whereas previously, since price had not gone down at all with no lower lows, everyone can trail their stops up. They'd be like, I'm going to put my stop here, I'm going to put it here, I'm going to put it here, here, all the way up. And maybe people have stops like, oh, I'm going to manage here because it's the retest of this. Or, oh, I'm going to go put in here because it's the optimal trade entry of this. Or, oh, I'm going to go put it at this low, right? So this is why the broadening formation works. Because everyone's long into here. When it reverses, they are all turned into sellers while an aggressive seller enters the market. So we look to take this first pivot and then trigger a cluster of pivots in here. And what it sounds like is like whomp, and it just takes everyone out. So if we go to SPY on the 15, there was an example of this yesterday, and there's an example of this Monday, I believe. So yesterday, right in here, on the 15, shooter 15 actionable signal. Where is that occurring? Top of the broadening formation, gauge the magnitude. Intraday traders, right here, goes 2215. That is a pivot machine gun, right? Back into the range. All these longs are long. Anyone that was short in the morning is blown out. Shorts get to re-enter. Thus, the long and the short guys are both selling. There is no buyer here. Boom, 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 boom. Takes out all the pivot machine gun nearby pivots, and it was nowhere near taking these guys out. So it works, right? Create the winning position. 2 down in green, right in here, or up in here. I think this is an inside bar. So when it goes 2 down in green in here, you reduce or flip long. You take the short, flip it long, and since you made money on the short side and we know the week is green, you can use their money to flip long with it, not risking any of yours. So it's truly magnificent, and you can do this both ways, right? Take the long in here, reduce by half, and then flip long, leaving this open position, make money on the short side, defending this position, and then flip long in here. Now your position could be 3 times as big, and you're risking their money, and your stop could be below this low a day, and that would be your break even because of how much money you've made. So the PMG is another setup. I guess if I had to pick a third setup that I think everyone should be trading, it would be that, because everyone was long and then it changes, or everyone was short and then it changes. I guess the fourth setup, now that we're kind of on the topic, is the kicking pattern. And this is my favorite gapping setup. If I had to pick one setup to trade for life, it'd be this one because of how simple it is. What we look for is a big green day or a big red day that gets gapped against completely, off the highs of the broadening formation for a short or off the lows of the broadening formation for a long. So in this case, the broadening formation here is going to be hard to draw in the daily chart. It'd be something along these lines, right? And then it expands, expands, expands. Kicking pattern here, where's it going? Down there, right? So right when that flips red, all these longs, they're long. Anyone short, blown out. When this goes 2-2 and it's now going down on the gap, all the shorts can get short, and anyone that's long in here is experiencing an immediate loss. Where if you bought yesterday's close, you're down 4%. And since it was bright green, closing out the highs, we know they did that. So right here, everyone has to sell. And we flip short. Right when this goes green to red, you short it and your stop's 17 cents. And you can see it just murders them in here. And this is my favorite setup. It's gonna be one of the best gapping setups as far as instantaneous winners and a super high win rate go. Yeah, so hopefully you guys enjoy that. And you can see the PMG is also kind of in there. If you go like a 4-hour, you can see it's all these higher lows people are long against, then womp, all these buyers sell. So if the range will extend or reverse in advance. So what we say is, since we can measure the range and say if it's going from here, it's going all the way up here when that reverses, and the continuity changes to favorable continuity, right? So like SPY. We go to the weekly chart. What's important is the continuity of this weekly chart. They make the slight lower lows to this broadening formation like this. 2 down in green right here. Where's that going? If that works, outside week is there, right? It runs out of time. So it becomes 2-2 reversal, causing a compound outside week on Friday, which I'm going to say is likely to occur. It's just very close to doing that. But we can say it's going from here all the way to the other side of that try if the signals work here. So we buy in here, small positions, add on the week, add. And then once it's up there, we want to have as much of that stock as we can, right? Everyone in here this week, they're like, oh, I'm going to let it pull back. And then I'm waiting for my pullback. And you see, it's like, it's not pulling back at all. What's happening, Alex, right? So no one's getting in there quick enough, but we know how to do that. So we want to get in there, buy as much as we can until it makes the new high. Once it's up there, if the week stays good and it comes above this high, 56538, and stays above that, we're good to go. And therefore, we create the biggest winning position we can once it takes that out, because we know where to gauge magnitude. We know where it's going. We add to winning positions because of that. Once it's up there, we don't have to know if it breaks out or not. We just have to know to be as long as possible before it triggers that level. So what we're doing truly is we're using the weekly group here to trigger the monthly group who's shorted, because their stops are going to be here, here, and here, right? So hopefully that makes sense. We want back through the range, and then once it makes the breakout, we don't have to guess. If it stays good, true. The breakout is true, it's good. If it goes 2-2 weak and comes back in, false. Breakout is false. Completely close your long position or reduce it maybe by half or by 60%, and then see what sets up, if it's going to reconfirm or not. So like when we go to SPY here on the week, this is an example, and we mentioned all these charts. You can go back, and the nightly videos and weekend videos are dated specifically for your fact of what were we thinking when it occurred. So go to the weekend video that occurred at the end of April here, and you'll see the momentum hammer week we mentioned going into the new monthly flip of May, and we said it's a pivot machine gun where everyone that's short is short against this, and this, right? So we can expect it will quickly go through that range. So from here up into here for $12, we buy as much as we can. Every signal we can get our hands on, we do it. Now, once it goes 2 up and then red in here, this is our first reason to reduce. It goes 2-2 weak here. This is our second reason to reduce. This is the first signal against this. Does not mean we have to fully get out because it's a winning position. Let's say our cost basis, after reducing half on this 2 up in red in here, our cost basis could be down here at 494.60. So we can hold that, right? And we can say, well, goes to weekly magnitude. Maybe we get some puts to protect our position, takes us out. And then once the day, I believe is a 322 in here, or a 32, yeah. So once the day pokes down and flips green in here, at that point, we can start to add back again because we can gauge the magnitude of the daily try and say, well, anyone that trying to short the failed breakout of that, we're going to go and add even more into that and try and get them out of that. And you can see bottom to the top, it's a little grindy in here, which is why we, again, talking about trading sectors and whatnot, the sectors are going to be a lot more better movement in this case, but comes all the way back up in here, and then it stays at the top of the try. Any positions in here, you hold at this point, and they get out of the try and expand. Once this range has completed and they get and gap out of it, the new try will begin. So all these positions in here can be put at break even. Because once you're out of it, unless it reclaims that, we got no problems. And then you can see into the future what had occurred. Support and resistance, they're now supporting that broadening formation, and that's supported by additional broadening formations that form in here. Then they go into the highs, reversal, you can see this is back into an outside day, broadening formation. Lower high, failed to make the new high, so this buyer was very weak. Shooter day, 2 up in red, makes the new low. Notice how they're reclaiming this range now, and they're doing it here. And true support and resistance is broadening, which is good to know. You can see it acts kind of as resistance in here. They poke it up, 2 go 3 day on the first day of the month with full time from continuity down, reclaiming all of this broadening formation. And then what did they do? They go all the way back through that range, stopping out all of these guys. So the whole goal is one side to the other, break even the stop, let it expand. And then if you add continuity in here, it should be extremely obvious what had occurred. So you can see in here, right in there, the weekly guys started selling, and then they came back to sell more. This is where we'd start reducing pretty heavily if we're managing this position very tightly. And then you can see last week, they started buying up in here, corrective activity against that, buying up in here, buying. Holier than thou, because you can't prove any other strategies actually are what they're saying they are. So like ICT, you can't prove the orders are there, right? If there's an order block, you can't prove there's an order in that order block. You might be able to go on to like a liquidity thing and say like, well, there's resting orders here. But if someone wants to buy a stock, like let's say Warren Buffett, Warren Buffett wants to buy 650,000 shares of Alta. Okay. What's he going to do? Well, he's going to go to the market and he's going to say, fill me for 650,000 shares. So is there an order block where they're like, oh, I really want this stock, but I'm going to wait for it to come down $60 to test this level? That's not what's happening, right? And you can't prove it. What's really happening is it's an aggregation between buyers and sellers, and this is all proven. And this is why the strat works the way it does, because it's irrefutably true. Ones, twos, and threes must occur. A scenario 3 is a broadening formation. Price must trade in the direction of the most twos and twos going 3. It has to, or else it wouldn't work. An inside bar is an equilibrium where buyer and sellers agree on price. A rev strat is the failure of that equilibrium. A 3 is a broadening formation, so we can treat it as such, trading back through them to gauge magnitude. And we add to winning positions, and we get out of losing positions quickly. And this is all based in what you can gather from the charts, because Rob, unlike most traders who went in and tried to look at the chart like as patterns and whatnot, he went in as a data scientist and decided that the reason traders lose is because nothing is objective. It's all an art. It's not a science, it's an art. You have to mark up the chart and you have to be like, well, like if this, then maybe that. Maybe this is a head and shoulders. It looks like one, but it could be a cup and handle. It could be a pennant. It could be this. It could be that. And it's all everywhere. Kind of like the Wolf of Wall Street. Like, and so that's why everyone loses. Why did 90% of traders lose? Right? Now you have a solution. Objectively, you know what a reversal looks like. Therefore, we can hold positions until they reverse. We know what continuity looks like. So we can gauge, is that person in there trying to fill 10 million share orders? We can pick up on that. We're picking up on the algorithms. We're picking up on the institutions because it has to work. If price is trading above all 4 opens, they're taking the offer. They're grabbing it. They're doing it right now. They're doing it aggressively. The greener that gets. So all of this stuff has to work because it has to work. It's all based in the data science of how we look at a chart objectively and not subjectively, which is why, like, holier than thou, you can say that if you want, I don't care. Go and look at freaking any other trader on Twitter and they're going to have the same thing, but they can't actually prove it. Like maybe they can have the trades, but they can't really tell you why it works. Why does critical range theory work? Because of what I just showed you. It's not because of the algorithm or whatever, because we know the algorithms have to be told what to trade, how to do it, buy or sell, take the offer, what are they doing, right? And then when to do it, which is what continuity tells you because it separates the groups by price and time. So it tells you, is the group buying this week, today? Is it doing it right now? When they all line up, they're told, buy the SPY, take the offer, do it right now, and then gauge the magnitude it's going there. No one else does analysis like that. So disagree if you want, but you can't actually refute any of the claims I've said. And that's the beauty in the strat, is it's all irrefutably true. Yeah, like why does accumulation, manipulation, distribution, what the hell is that? Right? That's a rev strat. It's a 1-2-2 where an equilibrium break has failed and getting countered by a more aggressive seller or buyer. Boom. Quantified. We know exactly why it works. There's no algo. ICT didn't code it. So be it, right? And then you wonder, it's like, well, why make up all the stories and all the stuff when it's not true? Is there and like I'm not saying ICT's a bad trader, I'm not saying none of that, because half the stuff he teaches is what we teach. Uh, Liquidity. When you want to trade back through previous range, you want to make a new low and then come back through it. Broadening formation. Because that has to happen. Scenario 3 exists. As far as like market structure shifts, what he's really trying to pick up on is 2-2 reversals or reversals on higher time frames. Because when price makes the new low to this on the day, it's the inside day down that causes, like, let's say a 3-day inside bar break lower or something. So instead of quantifying it as like I guess specific levels that the chart gives you, like a day, a week, a month, and 60 chart, where the opens are always the same, the levels are always the same, there's no guessing. It's marking out random highs and lows or specific ones depending on how you're identifying them, like short-term high and low, long-term high and low. All that's trying to do is give you like a weekly chart from a daily chart, like a short-term high on a daily chart. Like let's say this right here. So a high, slight lower low, slight lower high, slight higher high. This would be a short-term high, right, in ICT terms. Then when this goes lower high to this and this now becomes long-term high in ICT eyes, right? So when that occurs on a weekly chart on Alta, this is just the weekly changing continuity coming back in, right? So it's a weekly high, which makes it a long-term high, but we don't have to like guess and do that. We can just say, okay, the went up last week, the week went red here, it's negating what we know to be true, and then it's a 3-2-2, fun to say and fun to do, it's going down there. And then in this case, Buffett come and buy it up, and you can see now back into the 3 on the month. So maybe Buffett makes a good trade there. If you go on like the monthly chart here, Alta, why did it do that? Well, look at, draw the try right to left, pokes down, back into the 3. That's something we want to know about. The guy on Twitter getting puts all day, every day. I think he's just, I know what you're talking about. I'm not going to post his Twitter or anything, but I think he's just like farming engagement. I don't think he's actually doing that because he hasn't posted any order fills. He's just posted screenshots of Robinhood. Yeah, that is true, JB Aviator. Any strategy can work. You just have to manage risk. But the problem with other strategies is you don't have the concrete evidence that you want as a trader. Like that's a 2-2 Alta, where's it going? Down there. You want that evidence because it gives you the confidence. And if it doesn't work, you have your break even stop to protect you and say, well, my analysis, it was correct in saying like if it works, it goes there. Seller just didn't hit the offer. They weren't there. So be it. Go find the next one. But yeah, yeah, no, and if I sound like defensive or angry or anything, I'm just excited. I'm very energetic about this stuff. So don't take it the wrong way. And truly, I just want to help people. If you're trading ICT or inversion for value gaps or whatever you're doing and you're making money, good. If you implement anything we talk about here, you can hold your trades longer. You can probably make more money. You can add to your winning positions instead of partialing on the way up because you don't know where it's going. Like things like that, you can fix. But if you're killing it, then so be it. Yeah. No, it's very true. The like I would say the only difference is ICT. Uh, it doesn't. I guess it doesn't have the same clarity as like new traders. Like, is it this for value gap or this order block or this inversion for value gap or this or that or this? And the strat is like actionable signal there, and we don't have to worry about that. So it's just, and that's why I don't trade ICT. I tried it. I had my biggest days ever trading ICT. I'll be completely honest in saying that. Like I've done 9,000 on futures. I don't know if my screenshots are on my Twitter still, but I've done that in a day, in a morning, and like literally in an hour, right? Trading CPI and stuff. I've killed it with ICT and plus the broadening formations because I still was trading the strat on the stocks and stuff at that point. But the thing I didn't like is it lacked objectivity of what's actually happening. And it's also like it's so like once you understand the strat, it's so easy to be like, okay, everything's setting up a 2-2 week. I'm going to scan for a weekly signal. The strongest things this week will be inside bar up or have full time frame continuity. I'm going to go trade those, and then once they work, going to make a ton of money. Going to hold them because they're still good, and then you go on about your day. And you can create, you can invest and like have big positions that actually play out, right? So it just makes it simpler in the sense of everything is mechanical and there's not much guessing. I do the same exact thing, and I know ICT traders, you do the same thing. It's like makes the new low into your fair value gap on the 830 open at your kill zone, and you get whatever your entry model is or your critical range theory buy is, and goes up, and so be it. You do the same thing every day, but we just do it in a, I guess, a grander manner because we're doing the same thing every day, but we're doing it on 30 stocks on Monday or 20 stocks during the day, and we're just creating position after position after position. Just give me a sec. I'm going to drink stuff and take a little break, but it is coming up on 10 o'clock. I can probably go to 11. I know we got 100 and something people here, so if you guys are sticking around, I will stick around as long as I can. But give me a minute here to just relax a second. All right. Sneak dissing? No. I'm T Trades. I don't know if you guys know T Trades. He's one of the biggest ICT people in the space. He reached out to me. He was in our Discord first. I gave him like all the ropes as far as learning how social media and all that stuff. And he just took it and ran with it. He's killing it now. And he's a big ICT guy. And even if you talk to him, he will tell you the same thing. He'll say ICT is the strat. It's just different, very slightly. The entries are different, but everything else is the same. And if you look at his post, you will see that if you look at it through the eyes of strat. Give me 1 second. My girlfriend's calling me. sorry about that. But yeah, no, seriously. And me and him, we chat all the time, so we talk about the same stuff, and we're looking at all the same charts. But yeah, let's see. Yeah, so the thing with the fibs is the underlying like mathematical and theoretical reasons they should work is not true. Because if it was true, you could plot out every single price move going back all the way back with the fibs, and it should line up perfectly to the Fibonacci sequence, but you just don't find it in the charts, sadly. If it works for you though, keep doing it. That's fine. So in lurking reversals top or bottom of the broadening formation, do you wait for hammer shooters inside bars in the opposite direction? Iffy going against the grain. No. You want to go against the grain because what's happening at the top of the try is this. So the way price works is you will have, so price trades in ranges because, and we know that because a daily bar is a range of a high, a low, an open, and a close. So the range will have a high, it will have a low, it will have a open, it'll have a close. Therefore, the open and close, this is where we gauge continuity to understand if it's above the open, it's going up, the range is going green, right? It's going higher, and vice versa to the downside. So when you form this high and low, what's happening is people are getting in positions, right? So if you're getting long into this, it's going up. So since price, when it reverses, will form broadening formations, and I'm not going to draw out like each range like this. Maybe I could. So like when price reverses like this, so like let's say it was previously going up, like this. So 2 up, 2 up, 2 up, 2 2 reversal. This range here becomes outside of this range. This is the broadening formation. So when you're trading at the top of the broadening formation, you're causing a smaller time frame one where we say if this smaller time frame broadening formation occurs and then it keeps going and reconfirming, you're going back through that really big one, if that makes sense. So price always has to trade in the range, always has to create broadening formations when it reverses. Therefore, they're going to happen all the time. Now, what the broadening formation is telling you is it's telling you of the positioning of the current groups. So the reason we draw right to left is because when we draw it off this high, we draw it off these lows. When this is going down here, shorts have entered the market. They're short against obvious pivots, or they have stops where they got in. So you have stops in here. You got people who are short in here. You got short positions. So when this reverses, since it's made new lows, right? So it goes up, makes new lows to this. What that tells us is anyone that wanted to get short is now short. And we are at exhaustion risk. And what this means is when you hit the lows, breakout traders are slamming it. Anyone with a stop down here is slamming it. So everyone's selling. Then, once all that selling has completed down at the lows, when you change continuity back to the upside and the buyers now get control in here, what's occurring now is everyone who wanted to get short is short, right? So they're just sitting here and they're like, okay, I'm short. When it reverses back into this range, what's now occurring is price is now going up. So all the shorts are turned into buyers. So you have the sellers, the people who are shorting, now buying. Since price is also now going up, we have identified a buyer in here, also buying. So every market participant at this point is a buyer. And this is why the broadening formation occurs. So you'll see they make the new low, they reclaim the range. Now anyone that's short has to buy all the way up through this range while the buyers are taking the offer, which is why we trade back through a previous range as opposed to new highs and new lows, because we have people to stop out to cause a reduction of liquidity, or a decrease in liquidity. Because what we're actually seeing is someone in here is like, okay, Alta, this is a monthly chart, so we're identifying the institutional group, right? So let's say it's the trading desk at Goldman Sachs or something. They're like, hey guys, just did some financial reports or this or that. We need 200 million shares of Alta. It's like, okay, when do you need those shares by? Well, we need to buy them all within the next quarter. It's like, okay, well, the quarter is going to be green because they're buying this quarter. They're taking the offer and they're filling shares aggressively because they want the shares. So what's happening then is as they're doing that, they're stopping people out. And when they're doing that, there's only so much liquidity in the market, right? So when you stop people out, what's occurring is you stop them out, it's a buy order, and they remove liquidity from the market. So that 200 or 300 million share order, now they have less shares to buy. So they're like, and Rob would always say, he'd be like, "Where's the stock? Where's the stock?" Because they don't have enough shares to fill that order, which is why price will aggregate to the upside, because you're finding more liquidity as you go higher to fill those. And as you go higher through the try, you're also stopping people out and causing even more losses. And anyone that's not stopped out goes into an even redder position. So once it's up at these highs, if you're let's say you're like a let's say you're a breakout trader or something. This is a really stupid example. But let's just say you're a breakout trader. Your stop's here. So once it's above that, anyone that's short into this, they're all trading at an immediate loss for sure because we're trading above that range. So even if they're holding on to losing positions, we're going to blow them out as long as that buying is still occurring, right? So the reason this happens and the broadening formation happens is exactly that. And the reason Rob found this out, even though if you go and read any trading book, the broadening formation is said to be uncommon, or you just say broadening formation example. Relatively rare during normal market conditions. I can show you broadening formation on every single 5-minute chart for the whole entire week, every single day, with multiple of them. So is it rare? No, it's the only thing that can occur. And then you're going to see in here, it's marked by a growing market volatility in a series of higher highs and lower lows, which is true. But as you go and read any of those trading books, where it's like, I'll teach you how to trade, the broadening formation, they'll draw it out and they'll say, this doesn't happen very often, but it's not true. And this held up Rob for over a decade, right? So this is why Rob and I am personally so adamant about the try and the broadening formation, is because no one understands the utility of it engaging magnitude. And the reason he found it out was because of a Fed day. And what happened on the Fed day is this. News is coming out. Let's say it's at 8:30 on the flip, right? So the news was a rate cut. And I believe this was, it might have been in '08 or something. It was when the Fed days were really volatile. So the news comes out, rate cut. It goes up, right? And then, even though it's discernibly good news, because rate cuts fuel the economy with more liquidity and more money going into the economy, because when you cut the rates, people have to go and buy things to make money instead of just holding on in their bank account in high yield savings and all that stuff, right? It goes up and then it goes down and takes out anyone that was long into that news. Because it goes up, everyone gets long. The first guy to take profit on that long doesn't have to be a seller, but the first guy to take profit on it, since everyone's already long, it's an order vacuum. From here to here, all these guys are already long. So once it takes us out, everyone cascades into a loss and is forced to close their position, which is why you get whomp, takes everyone out. And now since it's trading below the open, once it starts doing that, anyone who held off into the news is now like, oh, good news is now bad. And they hit the bid here, right? So you're simultaneously stopping guys out, and then the sellers enter the market and hit the bid. And this range will broaden and get bigger. So we start this broadening formation like this. And then once everyone's short, because we're now going into recent lows, the first guy to cover is short, the same thing. And now this order vacuum is twice as big. So now they go whomp all the way the other way, and then the range will expand. So anyone that's in a loss, potentially short against these highs, or they're staying short and they're like, oh, it's going to come back. And you've seen this all the time. If you're traded ever, you've done this yourself. It goes up there and you're like, oh, it's going to come back. And then it pulls back. It almost puts you back to break even on your trade to close it. And maybe it goes like 10% negative after being 50% negative. And then it just takes off. Why does that happen? Because this range of traders who is short, including yourself if you're a loser in there, when it comes back, everyone's scrambling to try and get out of shorts. So the sellers in here, they're also buying this, right? And the buyer is taking the offer at that point. So then as this range starts to continue in the upward direction, this is drifting away from this previous range, causing even bigger losses for anyone that has not closed shorts. So broadening formations will broaden, and then expand, which is just a broadening formation getting bigger. And that'll occur until it reverses. And then you could either draw this new one out. So like, let's just say we get a new try in here. And if it's still above this try, which is the support and resistance of this range, then this try will start bouncing around and do the exact same thing. And it'll occur in a series because we know candles trade in ranges, and we know ranges trade in a series of new highs and new lows because of the outside bar. We can say price trades in a series of new highs and new lows. We can also say price trades in a series or multiple broadening formations. So we're doing this across every time frame. And when things are really moving, you're going to see this thing play out beautifully like we did in SPY this week, right? So that's your little introduction there. I do have a video that goes over this more in depth in my Losing Trader series on my channel. If you're interested in that, you can check that out. Yeah, this video will be perfectly available. What I want to do is I want to stand up so I can get my back going. Sorry. Oh, I have this AirPod in or headphone in. But all right. So can you comment on when the mother bars are a problem? Yep. So when you form an inside bar, that inside bar is an equilibrium, right? And what we say is the mother bar is what caused that equilibrium to occur because the price made no new high and no new low. What this tells you is neither buyers or sellers are in control on this candle, which is why inside bars, when we take them, what we're trying to do is cause the break of the mother bar. So you can see it here. When this goes inside bar and up, it's within $3 of taking that out. So we can take that inside bar with the expectation that it will take that out and cause this equilibrium to start resolving higher. If that breakout is true, it will stay above that, right? And the same thing with like the rev strats and stuff. That's inside bar. You're just reclaiming that equilibrium. Now, when we go to something, we say it's mother bar problems. This is the condition we're identifying. Where you form an inside bar, it breaks, right? But the sellers were too weak to make new lows, which is quantifiably true because the equilibrium tells you they agreed on prices. The shooter tells you it's actionable to the downside. When that equilibrium breaks, it tells you a seller has entered the market and is hitting the bid. That's the only reason price goes lower. And then once it goes down there and it starts recovering, where this year is red and let's say the month flips green in here, starts recovering, what we say at that point is the yearly participant was too weak to make the new lows. So at that point, you're still a higher low and a lower high to this range. So this inside bar just grew in size, which you can see this is a broadening formation as well. And then you'll see in this case, it rev strats, but it's still mother bar. So we say mother bar problems. Got to be aware of that. And then it fails to make the new highs to that. So this inside bar, you now have 2 years stuck inside of these 2 years, stuck inside of this year. So you have a 4-year inside bar to the year here. And you have these 2 years stuck inside of these two. So you can see how price will tighten up in here. And what this causes is the birth of new broadening formation because it's a price discovery where they're going to test the lows, they're going to test the highs until someone really takes the offer and steps up to make it go higher or really hits the bid to completely exit. So when we go to the monthly chart, when you have this condition of being stuck, you're going to identify the broadening formation where you can see we get a mother bar in here, stuck, slight lower low, and then reclaim the mother bar. Where's the try? Up into here. Boom, other side of the range. And this is critical range or candle range theory, right? It's not new. Rob discovered this over a decade ago. So completely not new at all. But you can see slight lower low, back into the range with a change in continuity where the buyers are now taking the offer. It's going higher, slight higher highs. So we can now draw the try out. So they made the slight lower low, they made the slight higher high. And you can see it forms because you're stuck in this mother bar here on the month as well as the year. Then they make the slight higher high, price discovery, comes back in. So what do we know? Everyone's long, right? And then it reverses. Takes a while in here because it's stuck inside. So then grind, inside bar down, gets it puking. Slight lower low now. You can redraw right to left. And you can see how over time this equilibrium grows in size, the same way a broadening formation does because it is a broadening formation. Then you can see the same stuff in here. They tried to recover it. Seller tried to come in here for a month. They sold it down. Failed to make new lows. This seller was too weak to do so. Goes inside in green, that's a buy. And if you go back to November of 22 on the monthly video, I believe we actually talked about this. Might have been on a weekly video, but you can go and check that out. We had the month there to trigger the quarter, inside bar up reversal, PMG. So you can see why we're looking at that. And you can see what happened. Boom, 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 boom. They've taken the offer. Where's the stock? Right, it's going up, takes them all out here. And then triangle. So you can see when it starts reversing in here, that's starting the broadening formation because they're too weak to take these out, too strong to take these out. So you 3, 3, 1, 2 down, and they're still chopping them up, just getting killed in here. So when we go to like a weekly chart, you're gonna see it's really obvious. You get that outside month, lower low, boom, 2 week, Momo week, add 2 highs, shooter week, get out or reduce, shooter week again, get out or reduce. And then notice once it reclaims this range in here, back under this, all these guys who are long are in jeopardy, and then down they go. You can see confirming shooter signal. There's some chop shop in here. Shooter signals, shooter signal, down, down. Slight triangle out, they poke up, slight higher high, 2 reversal, and then make the new low. So hopefully that makes sense. And you'll see whenever price fails to make a new high or fails to make a new low, that will birth the new try. So there's one in here on the week. And you can see just like everything else this week, 3, 2, 2. It's just stuck on that year, so we have less evidence in Boeing. No, mother bar is when you are completely stuck inside that previous range and you have two or more, or not two, but when you have one bar stuck inside a previous bar, this becomes the mother bar. Mother bar problems, like mother-in-law problems, very similar, is when you're stuck inside that range and it just chop, 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 right? Because you're knowing you're making the new high to this or the new low, so price discovery has to restart in a series of new highs and new lows. Yeah, Coca-Cola is a great example of the weekly down in here. So you can see slight higher high, right? And they failed to take the all-time highs out, right? So you got the slight higher high, slight lower low, 3-2 expansion down into here, 2 week of sellers to make the new low to this because they changed weekly continuity here where you reduce, comes back in, 2 week of buyers to make the new highs to this. This is when you get stuck inside because this is a higher low and a lower high. So then the try will restart as a new series of new highs and new lows. You can see poke down, poke up, bigger range, poke down, 2, 2, 2, 2, 2, boom, expansion of the range, causing you to take all those guys out. Then you finally get out of this one. And then you can see right to left, the range goes from being like this on the week to then expanding and being this. And that's when we say the range just grew in size. Now, this is when we want to start trading because the range looks like this. Slight higher high, 3 to that. And then 1-2 reversal week at the bottom of the try. Everyone short, this is going to cause them to what? Go into a losing position. And then boom, 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 boom. And then you can see they go in here, slight lower highs, and then triangle, that's a 3 broadening formation. They poke up, and then notice how they get stuck, chop shop in here. And we can draw the try out and we can say this range is kind of small, right? So it's a really small range in here. Then once it pokes down and reclaims that, we're now looking for this. And if that works and stays above these highs, 61, 66, we want to go for the major try. So we call this a sub try. We call this the major try. And then you can see they go up. Still lower highs to this stuff. And then reversal causes a broadening formation to occur like this. You got another one in here like so. And then here's your hammer week. 2-2 pivot machine guns through some of these guys into new highs. And then does not get reversed, causing the range expansion. 2, 2, 1, 1. Stop being salty in here. Yeah, no, if you guys have losing trades or if you're like, Alex, like this has pissed me off, I can't get it, just tell me the problem and we can flesh that out. That's most of what I wanted to talk about today is that type of stuff, but we haven't gotten too many of that, so it's fine. But um RTIOS. Asking as a TTO victim of former SPX put holder. Uh-oh. Got in on 724 and smacked with the gap up. 731 SPX. 724. So you're talking about this on Wednesday? So is that 724? I might be wrong. Yeah, that should be 724. So shooter day, yep, nice. You get the short, makes the new lows, boom. And then notice we are at new lows, right? So this is continuation, which is going to be short-term exhaustion when it goes into these lows. It did spike up in here green on the day, but you'll see the volatility with the VIX kind of going everywhere. Pretty good volatility on SPX, 100 points a day. So when we're looking at this, if you're a longer term guy, then yeah, right? If you got this day, 2 down, 2 down, and then it's green in here inside, then inside again, 3, and then 3, 2, this is probably the thing that would force you to get out. But what we want to do, ideally, like if we're going to be the put guy, kicking pattern 2, 2 here, we want to get the short in this stuff, reduce that position by half, and then manage risk to the daily reversal against right here. So if you can get the short during this day, which you have, 21 points of downside to do, then you're in, and then you can add into this, and you can add into this, maybe reducing at the close depending on your overnight risk and whatnot. And then 2-2 against in here, you have to reduce. 2 up in red, you could start adding back some more, and then gap down, add some more, and then puke. You make a ton of money. And then 2 down. This went green in here, so maybe you get profit taken and whatnot. And then this is the chop shop, where you're going to get killed if you're trying to do anything in there. So inside day, mother bar to that. Slight poke up, and then red, that's a rev strat. So even if you tried to flip long or take longs in here, you had to flip short to go outside day. And then this is prior to, I want to say CPI. Could be wrong. There's some type of news event, but 3. And notice at this point, though, still mother bar to this. So they're stuck, slight higher high, slight lower low, and then reclaiming back into the 3 at the close. Then the next day, 2 up. Then the monthly open, when things occurs matters. So you can see the mother bar is this right here. You have this equilibrium that forms like this. And then on the flip on this day, this is when we got the really nice shorts alerted on Twitter as the 122 rev strat. But you can see, so you get this equilibrium, chop, 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 pokes up, shooter, pokes down, boom. Then they go in here, forces all these guys to get out. If it's you, that's fine, right? Some people, you're going to take a loss. It's going to happen. And then up in here, this is the rev strat 30 short with the month red, the day and 60 red, negating the weekly for control. And then boom, the range just got bigger. So the biggest thing to understand is just when you're trading, we want to be drawing these tries out, because if we do it back through that previous range, and we know we can get shorts in here, reduce by half, and then stops at high a day to manage our risk and stay in that trade, we can catch this stuff. And we can also, when this 60 starts coming in, we can either hold that position, partial it here, or flip long with calls to reduce the amount of drawdown you're going to get on this by making money on the way up. And when it goes 3-2 in here, you can get short again with more because you made money on the way up. Now you're adding back to this short position, and et cetera, et cetera. Don't want to beat a dead horse here, but it's just a matter of understanding that continuity and getting those broad informations in your favor. Risk management with the strat, I guess it depends what we're doing, but the main thing is we want to enter on reversals. We want to add on continuations. So for example, SPX, when this 2230 occurred, rev strat, this is something we shorted, and you see it's inside bar 2-2 rev strat. We talked way earlier in the beginning of this why the rev strat is an amazing signal. It's a counter of an equilibrium break where you have a buyer that takes the offer aggressively and then gets countered by a more aggressive seller, which changes control and then reclaims the mother bar to give you a bigger range to come back through. So when this short occurs here, first of all, it should go instantly, which it did. And we get short here. Our stop can go daily open to manage our risk very tight, or you could use the high of that because it was a simultaneous break. Depends on the trader. Some will use penny stops plus the spread. Some will go a little wider, maybe to this open. Some will use the daily open. Depends on the stratter. Personally, I go like 30, 40 cent stops on like SPY here. So once this works, 2 down. Then on the second 60 of the day, the second 60 is a 2-2 reversal here as well. So we add to our winning position because the 30 worked, it creates the 60 signal. You'll notice the 1-2-2 rev strat 60 right there. So since we already have their money, we're going to use that money against them. We're going to double our position size. Our cost basis goes from being here to being here. So our stops can be in profit or at our break even of that cost basis. And then until that 60 reverses, we want to continue to add into that position. And just sticking to the 30-60s to keep it simple, you get the inside 30 momentum shooter add right here. Third entry short. Your cost basis at that point might reduce down into this stuff. That's fine. Down, down, down. Poke up, potential 3. That's a momentum signal against this hammer here. So you can even short on that if you wanted to. In this case, we'll just say we didn't, right? 3-2-2. This is your first reason to start reducing if you did not reduce on that hammer. So at that point, we reduce. If your brokerage is first in, first out, then your cost basis is going to say like you bought your SPY puts here or something, right? But what we know is if we're in profit, we got all these shorts in the morning, and this goes 3-2-2, we can reduce either like half or 40% of that position, and our cost basis based on our P&L that's open is actually, it's going to be way up here. Because even if that trade you're in goes red, if you realized $1,000 and the trade was up 1,000, if it goes down 1,000, the trade's up $0, you're still up 1,000, right? So you can risk the rest of that 1,000 as their money because you made it in that trade. So at this point, we're short, and we say we hold into the close. As we look at time frame continuity, it tells us that at that point, you're going to see every participant was a seller. So this is just profit taking at the close, which is another reason we also don't have to reduce. But in this case, we're saying we do into the overnight session. Then it opens as a 2-2 reversal 60 kicking pattern here. So we could even try and short more on this. And then you'll notice 2-2 reversal here, fails to make new high day, 2 up, 2 down, fails to make new low day. There's a chop shop in here. So we don't trade anymore until we get out of this range. So we stay short, hold the shorts, maybe get some extra ads. Gap down here on Monday of the new week. The weekday and 60 change control right here. This is where you cover the short. Because at that point, we can no longer identify the monthly seller who is present on the 60-day and week charts, which we identified up in there. And therefore, we have to close our short. And maybe you don't have to close all of it, but like most 60, 70%, you can hold the rest. But then on the way back up, if this works, take the money you just made on the short, use it on the way up, right? So when the 60-day and week are in force, controlling each other, 2-2-60 here, longs. Reduce by half here, right? Maybe you place some shorts in here. Depends on what you're doing. This is conflict, which makes it more difficult. You'll see the poke up, inside signal, short from the top of the broadening formation. And then you get more shorts in here, right? And then 2-2 in here, flip long. Right now it's going up. So you can do this depending on the trader. Some people will choose only to trade full time from continuity. Some will choose to trade the day, week, and 60 for control. Some will choose just to trade the day and 60. Depends on the person. If you're going to be managing risk and doing this properly, day, week, 60, and month is ideal, because that's going to be the strongest stuff, and that's where you get the things like we kind of talked about before, like Melly, where it's like gap down buy, 2-2, boom, reduced by half, and then off to the races they go, and you see 14%, right? So you can see in here, full time frame continuity, every participant's a buyer. They get slight periods of corrective activity here and here on the day, but the week and month, they're all confirming each other all week and all month. So hopefully that all makes sense. And this is like the holy grail. I'm giving you, like, I can't believe Rob gave it out for free because of how like logical, simple, and like easy to understand it is. Because all we're doing is, it's like, well, give me the reversal, check. Give me the position, check. Make some money, check. Partial some of it, check. Manage your risk to the weekly open, the daily open, the reversal against, the signal falling out of force, whatever you want. You're in a winning position. We say the casino's open. You can do whatever you'd like. You can add to it. You can reduce it. You can partial it. You can completely exit, whatever you want. Once you're a winner, there's no stress. And it's amazing. Trading live? Yeah, we can go and actually look at today's live examples. We trade live every day. All the days are cataloged. So when we go to stat analytics here, or stat trading here, you're going to see live here on the SPY, or on everything. These are all the lives going back. I believe we did have like a purge of these because there's so many of them, but we got 200 days going back. So almost a full year of live streams every morning between me and Sarah. There's also some other streams by like Tom in here talking about trading NASDAQ overnight and like psychology and whatnot. But it's 200 something setups there. The other thing is, in hindsight, yes, everything looks simple, but if you understand how to make a winning position on a reversal, you know exactly what you want to do, because we know what a reversal looks like. We know what it doesn't look like. So if it's still good, we just hold, and then that's it. And you do that either as a daily guy, a weekly guy, a monthly guy, depends on your time frame and time horizon. But that being said, this morning I was extremely tired, so I don't want to put the volume in here. But you'll see me flipping through the charts, and actually, let me see. Nope. Yeah, so this is right in the morning.
To be true, gapping up.
So you can see
momentum hammer.
This is us just talking. I can kind of pretty much just play this. Let me
trying to go up into these guys. 554.87.
But yeah, if you want to see this every day, I have live streams on YouTube that are free. You can go and check those out. And those are all saved there.
We go to Qs. Same exact thing, Qs.
So what we do in the morning is we first start with indexes, and we're looking to see what actionable signals do we have. And you can see we got actionable signals,
weaker, but gapping
and all that stuff. Yeah, IBM gapping
Dow
up.
Jones gapping up as well, and
Dow Jones gapping up
around the week after. Really solid rev strats on the 30 yesterday. Which
those were the rev strats we mentioned yesterday.
Continuing to hold, given we have that weekend.
I really want to go and show yesterday's instead. So I do that
today. It's
simply because today was not. It was a good example of the longs, but yesterday was even better. Hopefully you guys don't care about that. If you do, maybe we can make this public or something. You guys can go and check it out. Yeah, so if you don't believe me, you can go and watch it yourself. So now that is public. You can check it out on stat. But let's go and take a look. And I had way more energy the previous day because this morning I was slightly hungover and I just didn't sleep as much. So, let's see in here. I'll remove my face here.
Since market's slightly on the
so there. Looks like my volume was turned off on my mic. Happens all the time. But
let me fix out the Discord settings. Whenever I turn off my computer and turn it back on, for some reason it always decides to do that on the trader there. That being said, though, if we go to
the gap list. We want to see, since market's slightly gapping up, is anyone taking yesterday's lows? That's where the losers are going to be. So you can see we'd say exactly what we're thinking. So everything's gapping up. The losing traders of the previous day.
Close at the highs, then boom, kicking pattern. You take 4 days worth of buyers underwater. So
you can see exactly that. If you're long EATs and the whole market's gapping up and yours is gapping down, you pretty much have to sell that,
56,
right?
opening
and this is what we're searching for, where people have to do things. Losing traders have to do things. I'm just identifying we got 4 days of kicking pattern coming underwater. You see NU, not so much.
Slight gap down, but not really changing anything there. OUST. We opening as a 2-2 or 3-2 month.
Time frame continuity, I'm working with TradingView to try and get that out there.
As a 3-2 month. It's slightly inside to start, but we can have that up there.
Thank you very much, Chris. And let me double the speed. I hope you guys don't mind with that, because this is like, what, 10 minutes before the open here.
No idea what TECHY is. Could potentially have a nice outside day to the upside if they stop them out and start coming back up.
Did I?
Google. We opening inside day, so notice did not rally the rest of the market. And inside down is one of the weaker names. It could rev strat, but the week, the month, the day, and 60 are all going to be right under the morning open.
Google, this is one of our best trades on the other day on the short side.
And 3, so we have this big 3 in here.
So you see we're identifying the broad information.
So we prefer to take this out first, right?
Yeah, 160.93. We prefer to take that out, right? And we got inside day signal. So we're going to put that on the list.
Google there.
We got the 1-2 down.
On the upside, check that again. 10-cent holdings. Okay. Thank you. SCRVs
Lane in there. She does all the gaps for us.
We negate the week from red to green. Still not a game month, but either that gaps up and then PMG by staying green on the day, or it goes red and then takes these guys out down here. So you got up in there.
Identifying a PMG kicking pattern. We're also identifying the continuity to the upside or the downside, because we don't care so much for direction. We just care if we can make the position.
MU has the momentum hammer from yesterday, which we did mention on the nightly video.
So this is MU. Now some of the stuff we talked about before, and notice the momentum hammer. And we're identifying that on the gap list. So we're going through and we're just analyzing all the data, giving ourselves our signals, getting ready for the open. And we can just kind of skip through this.
Or $30. Initially SPY red, so if you're doing profit taking on the gap up, you can do some of that there, same cues. And if you want to be patient, but you can say a SPY, it's not a reversal on the 60, so still good. At this point,
so we're saying SPY still good on the 60s. It is gap up red, so we'll be aware of that. But you don't have to get out since it's still a gap up, still good. You see I'm flipping through the charts. You got some energies breaking up.
Google those confirmed today is gapping down slightly green.
So I noticed Google's gapping down slightly green.
Prox goes inside 4 hour up, reconfirming from the strat attack /
See, we got some 4 hour stuff confirming from the nightly videos, from the weekend videos that we're tabbing through. It's all just from the top of my head, also from some of this list.
Meta 4 hour reconfirms weekend force.
Yeah, I know. I'm trying to. I can mute this here so you can kind of talk over what's happening. But in the morning, what we're doing is we're just trying to find what's happening, right? So AZN here.
You see Netflix reconfirms weekend
force. Like AZN. This is one from the strat attack list we pointed out, and we pointed out on the weekend video, right? So you'll see we identify it.
EZN is going to be a 2-2 day if that breaks down, but we want to see that be triangle.
So we want to see that be triangle layout because the week is green, because they bought Monday, Tuesday, because the month is in force, the week is in force. We want to see that go potential 3. And this is
all. Get that question right before the open here.
And this is just me spitting out data.
So Netflix reconfirming. So you got strat attack there, and just right up they go. Take an offer, second pivot target from the weekend vid, and that's up almost $30.
Identifying from the weekend videos,
reconfirming still good.
All that stuff.
Yesterday, nice.
And identifying that everything from yesterday is still good for the most part.
MU
is we're also talking about positions we had taken the day prior and how to manage those.
Going down. So it's fine. Do we have to get out of that stuff? No, we have to hold. So weekly makes you much bigger. You're about to negate the month.
Then we go and hit the strat scans to see how many 2-ups we have to identify is the market going up or down. How
many 2-ups we have? 51. Who's winning out? The buyers. How many in-force signals down do we have? 16. So you got a few in there. Some utility, some healthcare, some defensive. So they're just going back.
So we're identifying there's some defensive going down, which is good. It tells us they're rotating into tech and financials.
Financials here. See XLF goes inside day and up. Confirms a 3-2-2 on the week. Tells you JP Morgan momentum hammer right here. Take it.
So you're identifying financials are like here, right here. JPM. That's something we want to know about.
We take a week up as well. Bank of America, day up, week up as well. So all financials are joining the party, giving you more evidence of the buy. Since they didn't participate yesterday.
And this is adding evidence to the buy that we already knew about earlier in the week. So we're identifying that as well. And this is me, and we're just really flipping through the charts, right? So, and this is double speed for anyone that's looking at this, but
something around the lines of this.
We're identifying some gap up and sell in IBM to start. And we see Crocs and stuff. So they did break the 4 hours initially.
Google, green to red day, continuity entry down, full time for continuity change.
Yeah, so Google, right there. Green to red day, continuity entry down on the gaps. So notice, like we talked about with continuity entries, when it goes green to red, we can hit the bid right there if we'd like. This will also then set up shooters.
If you're a gapper trader, this creates momentum 5-minute shooter with the day in force.
Yeah, notice momentum 5 or shooter. That's an actionable signal confirming the daily signal on this. And we're looking down here, 160.93. And now we're zoned in. I'm like, Google, I really want to go after that.
Right? And what you'll notice is like if SPY is pulling back like this, This is all the really strong stuff either going sideways, and then all the weak stuff taking yesterday's lows like Google going down.
So we're identifying SPY's pulling back, right? This is conflicted with the weak, which is really green at this point. So we don't want to go after things that are taking yesterday's highs and failing, like SPY. We can, but the weakest stuff will be a 2 down on the day, as if it's 2 down, the sellers are in control, 2 to the downside. It's not a failed uptrend, it is a successful downtrend, which is what we would like to trade.
We go after that stuff taking yesterday's lows if we're gonna get the shorts, or we could say,
yeah. So we say going after the things taking yesterday's lows, specifically Google.
Slightly weaker right there, 225 IBM. We're gonna short it. There's a PMG.
Say IBM.
Nvidia 225 up and coming back down, so you can reduce some. Same goes for most of the other chips. MU 225, Marvel.
So we're identifying when the fibers come back in Nvidia and stuff. You can reduce some because we were long yesterday and we had really big open positions from that.
3-2, FSLR 2-2.
You see we're identifying all the chips are starting to do that.
Gap up selling a lot of semis. That's gonna change a little bit of what we know, but
so gap up selling a lot of the semis.
And we say it's longs of yesterday if you don't want, but you could try and do the shorts.
And you could say. You can see we're not saying get all out. We're going out today. We're just saying we're seeing some simultaneous semis profit taking to start the day.
Risk their money, not yours.
Right. And then Google right here.
Google
I pretty much entered it right after we talked about this here. And this is in 2x speed.
You see SPY second fiber, they firm up a little bit.
Or actually, I think I got Google on the green to red move. When I focused in and I left that chart up there, that's when I filled my order. So it was actually slightly before that. And if you don't believe me, I can grab the fills if you'd like.
Whereas Google, shooter fiber right in there, you got the action bullish, confirms the day. It's momentum though, so it's got to just go.
So you can see we're identifying that's momentum shooter. That confirms the day and it's momentum, so it should just go.
Right, there's no messing around.
There's no messing around with Google here. It just needs to get going right away.
It's got to stay below that 163.55.
So 163.55, that's our line in the sands. Got to stay below that, and then we get
the SPY might set up to the rest of the market on the fibers. They tried the downside, flipped it to green, and not staying down in most of that. FSLR is one of the chips that's very weak, so it's almost halfway. That's outside day.
So you can see we're just identifying weakness and strength to start the day. And on these fibers, not everyone's trading this. And personally, I don't get in there unless we have things like Google, where it's like, okay, definitely Google full time from counting you down, the market's gapping up, and this one's not. That's where we have really high evidence that like there is losing traders in that stuff.
You might have a big 5-minute road information in there today. Microsoft stays strong. So inside fiber Microsoft, that's beyond the strong names.
Then you can see we're identifying while the market's pulling back, what's not doing that. So we can say Microsoft much stronger than the rest because it's not taking the morning lows. So as time goes on, we gain evidence in our trades. And the reason we gain evidence is because we know over time you get more candles, which means you get greener or you get redder on whatever your weekly candle is, your monthly candle, right? So you have more evidence as it gets greener. So we're identifying the stronger stuff that's staying green. Because if the market recovers, this is the stuff where they're taking the offer while the market's going down. So we know there's more buyers in there than anything else.
Anything inside fiber right now with full time for continuity up will be stronger.
So you can see anything inside 5 with continuity to the upsides can be stronger,
Microsoft
which is a scan that some people
Netflix
can
fits
do.
that, momentum fiber setting up, tech.
So we're finding that. We got Netflix
Microsoft
doing that too.
Google Crater.
So you see Google instantly right away because it's momentum, because these long buyers in the morning who bought and then potentially managed the risk to this pivot level, we took them all out and then whomp, everyone's hitting the bid. It's because you have full time from continuity that this
inside
occurs.
one at the lows. So make sure you defend that position. Do not let them.
So we say make sure to defend that position. Do not let it go red.
But you can see just right in there, boom, $1. That's pretty easy.
Goes $1 in 5 minutes. So instant winning positions is what we're looking for. And then the green to red move, we're measuring that out as well.
In 5 minutes, not even 3 minutes.
42% in 5 minutes for me there. And this was like a 230% trade.
Adobe, Microsoft, and Netflix. You're going to have all the inside fiber momentums to go to the upside and keep going. That's where you want to know.
So you can see those are all momentums. And notice we're mentioning it's a momentum signal. And the thing with momentum signals is you have to defend those really, really aggressively. Because if a momentum signal fails, it turns into momentum the other way. Because momentum tells you continuation of aggressive buying. If that aggressive continuation gets countered, it tells you those buyers are gone. Right? So we have to know if it's momentum or if it's reversal.
4-hour inside up, hammer and force, so confirming the week there after yesterday's 2-2 create a position long.
And we're talking about some of the stuff yesterday. That's close
Home Depot
to confirming.
3-2 up add if you bought the 60.
Yeah, so Home Depot, we had the 31260 yesterday from the bottom of the daily broadening formation. We mentioned it's a 3-2 day add.
3-1-2 simultaneous break with lows yesterday. 3-2 causes potential range expansion. So you can either look to add to that or wait for some additional signals to reconfirm that 3-2 day. You get a lows right off the 60. Very nice.
You see this simultaneous break with lows, gathering evidence across multiple stocks in the same time frame in the same sector that are correlated. Then Google down in here.
Watch that one, it just broke inside up, but could rev strat back down to full time.
Yeah, so we're identifying the rev strat, and we say that's an add.
That would be potential add if you're trying to get in there with more.
Yep, so you can see we have the green to red move, potential 1 entry short, fiber momentum shooter, 2 entry short, and then this right here, 3rd entry short.
You have 1 minute for that to make a day, and then we'll have to see if it stays down. Apple goes 2 up again on the day with a weekend force rev strats. Good mention by Chuck there, and you got this nice broad information in here. Look at this on the 5 or the 1 minute.
And you see we're looking at the chat, we're identifying what they're all looking at because we have some great traders in there that help me out during the day. And we want even more. The more traders, the more keyboards, the more eyes we have, the more money we can make.
Day. Boom.
You can see rev strat oneer. That's a shooter. Instantly it should go because of the rev strat, like we've already talked about during this stream. You can go and check back in there.
Right there. Down they go, low day, break even, that stop. It comes back here, you have to stop on that ad, break even. There's no laying.
You can see we're now talking about the levels of defense. We want our stop right there on that ad. Because if it hits low day and then comes back in, that's countering the momentum signal, or you can see it's an inside 2 minute and down, which is momentum, it's continuation. So if it comes back into that, it's a 2 minute rev strat the other way. So just got to get going. And you can see confirm ad, confirm ad. So the rev strat oneer causes the 2 down 5er continuation. Now we're just flipping through the charts. But you can see we zero in on the specific stuff.
Here you can see 1, 3, 2, boom, that's your actionable signal.
And then we're now going to the gap list, and I'm going through this stuff. There's a lot of things, and I can't track it all like perfectly, right? Like you can see I'm flipping through like 30, 40 charts within 5-10 minutes here. But the reason I do that is because not everyone's going to trade the same way. Some people are like, I want to trade the gappers. Some people I want to trade the kicking patterns. Some people I want to trade the weakest stuff to get the shorts. Maybe I only take shorts, right? So everyone trades differently. And this is why we say like make a trade plan. And then once you jump in the stream, if you're like, wait, a rev strat or a momentum shooter 5er that's going to confirm an inside day down with full time frame continuity on Google, and you hear me say that, you're like, I'm getting in that. And then I'm going to zero in on the stuff that continues to work. And I'm going to mention ads or position management.
Well, 1, 3, 2 reversal. And you can see this morning. In this case, it did open below that, which makes it a little bit harder, but you can see rallies up, double inside one actual signal, boom, flips the data red, full time frame continuity down.
And we're just kind of pointing out stuff that has occurred.
Reconfirming the 2-2. So on a 10 minute basis, 2-2 on Nvidia still coming in.
You see, we're saying that. Stuff still coming in on the chips.
AMD, tenor, same thing, still coming in. So you can see identify the pivots that you're coming back from the gap up, and then boom, 3-2-2 tenor, they're coming back into these pivots below this stuff. 140.04, it's trying to get 139.10, maybe an outside day too. You got a lot of the semis doing that. SMH, gap up sells. That's something we want to know about. It is. Yeah, this outside 15er to start the day, so 3-2 to the downside.
So we're identifying it is starting to gap up and sell, right? So we're gaining evidence as it's going on with things getting redder.
Maybe the trade again here. SPY, fiber stays good. They're 3-2-2 tenor potentially. Hughes, 2-2 tenor as well as a tech in a little hit today.
So we're identifying the rest of the market on the gap up is doing profit taking, right? And we're identifying they are potential 3 days at that point.
Short.
And you can see 3 entry short Google. Or mentioned that. Red gets redder. And then as we go throughout the day,
boom, crater, they just hit the bid, but it's got to stay down. It goes inside oneer here, AMD, so it could set up to try and keep going.
And outside 60, you can see at the open, things are changing and happening really quickly. So this is why we say with new traders, you want to hit the 30 and 60s because you get 30 minutes to figure it out. And I get 30 minutes to figure it out. It's like right at the open, like things are going crazy, and it's hard. Even myself, when I'm streaming, it's hard to keep on positions. That's why I try and nail into the ones where I'm like, okay, we pretty much know this is happening.
Maybe they're rotating on attack and buying more industrial type stuff.
So you can see here, this is something now where we identified and we're gaining evidence as the market goes on. So when you talk about Dow Jones, it's like we can see SPY and Qs, they're coming in, right? So we can say it's profit taking SPY and Qs. It's not changing the week, so we can't say it's full time from continuity or anything. It's just gap up profit taking.
Here Qs will be potential 2-2 SPY, potential 2-2 Dow Jones. Dow Jones still.
So Dow Jones, notice, completely different. That's still going up. So what this tells us is they're still willing to buy the Dow, which means this is profit taking on the SPY and Qs.
So what this tells me here is this is likely triangle out. Maybe they're rotating on tech and buying more industrial type stuff. But Dow.
So I say that like maybe they're rotating out of tech, but it's likely just be triangle
inside
out.
5 up there. If that can stay above that, inside 5 and up, that means they agreed on price.
See, we're now identifying the equilibrium and saying, well, they agreed on price here, and Dow Jones is the strongest one. So if they stay above that, then that looks really good because the Dow is going to stay green on the day.
As long as this equilibrium acts as some support and they stay outside of this stuff, they're taking an offer in Dow Jones. So maybe they're rotating out of tech, and we see the other ones trying to recover. But for now, Dow Jones staying up, which is a sign that this is likely pull back and not like crash.
Yeah, so you can see it's not crash. This is just pull back. They're rotating out of some stuff, buying some bigger stuff.
They're not really that scared. They're just rotating out of tech for the most part.
And you can see we're identifying the VIX, and we're gaining evidence. We're gaining evidence. We're adding evidence, and we're gathering evidence on the position because once we get into like the second 60 of the day, the end of the first 60, we pretty much know what's happening. We're like, okay, they're buying this, they're buying this, they're buying this. This is still a short. Google stays good, blah, 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 etc. So right in the morning,
watch that video 3-2-15.
People,
NXPI 3-2-15 are setting up.
What they want to do, and I'm going to pause this here. What they want to do, and this is probably the last thing we're going to cover. It's getting kind of late. But what people want to do is they want to go over the weekend and they want to be like, okay, got this big list. These are all my best trades. These are the best setups going into the new week. Why do we know that's a bad thing to do? Because green gets greener, right? So if you have the best hammer rev strat set up on the week and it looks just amazing and you're like, I want to get the mortgage on my house, I want to get a second one, I want to sell my car and I want to buy that rev strat week. And then you come in and it doesn't break, nothing, right? Let's say it does break, but it breaks on Thursday. You have way less evidence because it took all of the beginning of the week to break. So what we want to do is we want to come in and be like, okay, we have these signals. These are things closer to reversing, closer to doing rev strat, closer to doing a 3-2-2, closer to an inside day. So these are the things we're going to watch initially. And then as time goes on, we're like, okay, this is really green. This is really green. Green gets greener. So we're going to stick on that stuff, right? So as the open goes on, we do this every morning.
FSLR 3-2 15er with an inside fiver. So pick your favorite chip and go after it on the 3-2s. QCOM's gonna have that as well.
And you can see we're kind of just saying pick your favorite chip. If you want to go for the 3-2s, you can. And for shorts,
video right off the tenor. Puke. $2 in less than 10 minutes. That's something we look for. Google puke. Another serial winner.
Google,
right? Google, where are you going? Down there, 160.93. Give it to them.
And they're saying, where are you going? Down there, 160.93, right?
Then SMCI, yeah, I mentioned Chuck, big 3-2 potentially. And this is an inside week, so you do have a little bit more credence to getting that big outside day and maybe going further than that. But really, your broad information is down in here, SMCI 535. So would have been a good 225 name in here. You see it stayed down in this case. Now new 15ers open. So mine.
See, we're kind of just pointing stuff out. Not every single thing we talk about is something we traded, but it's really good to understand like what's actually going. Because if this SMCI trade is like going to go really down, it's going to look like that first because red does get redder. So identifying that doesn't mean we have to go in there and short. Like if we're talking about, we're like, oh, this looks pretty good, blah, blah, blah. You wait for the signal because the signal creates the position. The position creates a winning trade. Then the winning trade allows you to partial and then hold. Or the winning trade allows you to hold until it reverses. So we're just identifying, gathering evidence.
MU gap up 2-2 back down. Did have news this morning.
And you can see we're identifying some of the gapper signals. And not every signal works. Sometimes, and I think in this case, some of the gappers just didn't work. 2-2s down, and you just stop out. So be it. So you see NVIDIA compared to MU, it's like they really brought that one down.
Give control to the tenor. Still.
And then you can see it goes inside 5, which means it firms up at low.
No one reversing, so we'd like to see a momentum set up to the downside. Google, again, add 15 or 2 to the downside. And
so 15 or 2 to the downside, we say again, add. Why do we say that? Because it's obvious they're hitting the bid. And it's obvious they're going to 160.93. So why would we not add? We know where it's going.
Reconfirms control, and you know they just slammed the bid. So,
and you see?
You can slam the bid with them, or you just continue to hold.
You can slam the bid with them, continue to hold. Pick one.
And so far, 72% on the green red move for me on Q, not bad.
And I got 72% on that.
So again, they're still buying things.
You see Crocs, now we're going to the stuff, and we're still buying the Crocs. It's going into magnitude, so we mentioned that.
Still believe that this is likely to firm back up, so you just gotta be aware of that. You'll see on that.
And I say we still believe that the market's likely to firm back up. So if you're shorting the market, you have to be aware of that, and we're telling you that.
Second 15 SPY does firm up, going inside right now. Qs firms up, going 3-1. Dow Jones. Slight profit taking at the high, still above that 5-minute equilibrium, so we'll see. It looks like they just reclaimed it. And then IBM firms up a little. So if they're gonna really get going, they're gonna go back into those 3s on the 15ers. But since we have inside
so we're identifying the outside 15ers.
They do, we're still 3-1. We'll see. So on the second 30 of the day, we'll have probably a better
etc.
Make $2 on the downside. You can risk $2 on the upside if you'd like, or ideally you can put it kind of just up in here. I don't want to risk all the way to high day. But mind that new
answering some questions you have.
At this point, it's still day, week, month, right on Google. So
yeah, so Google. Now we're identifying continuity. So we create a position, then we manage it via continuity. So what do we think this is? The 5 minutes green, the day is red, the week's red, the month's red. And this is the quarter in this case, but the month was red.
I prefer to see that as profit taking than not.
So I say prefer to see that as profit taking.
Full reversal off the lows, but we will have to see. We still have lacking evidence, right? Second 30 of the day will tell us on the decoupling if that's going to keep going.
And then you see we're saying lacking evidence. We just have to see second 30 a day. Do they reconfirm? Because what time is this occurring at? 8:48. So we've got 12 minutes till the new 30 opens. We can say the 15 did reconfirm, but the 30-60s are kind of like our intraday like way of measuring
Netflix 2-1-15 notice not
where's everything occurring.
Sit on bid. Comes back in a little. They're on the bid.
See, we're still identifying like Netflix. They're still buying that. So like they're not selling the really strong stuff, which tells us again
inside bar. It looks like it's doing nothing, right? What it's really doing is moving back.
And you see, we're identifying it's a momentum, and we're talking about that.
Or it's really quickly in here.
When we're talking about this, it's like it's obvious at that point the market's not crashing. If they're still buying this, they're still buying Apple, all the other tech names, right?
ARM on the 2-2-15 reclaim of yesterday's highs in the chips could become PMG effective upsides.
We're mentioning
the chips. Also see QCOM 3-2-15 down and back in yesterday's range.
You can see we're identifying some of the 3-2s. We said pick your favorite chip and trade the 3-2. So there's some of that stuff. So RevStrat Fiber FSLR mentioned. This does make new low day. So just etc. 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 Then as the day goes on, we gain more evidence
in there.
And
I know Home Depot lows can also trade with the Dow there.
You can see we're identifying some of the stuff that reconfirmed 3-2 lows still good.
HD for now.
Home Depot still good reconfirm, right? So these
see Google slight corrective activity, kind of what we figured there. And
I actually can't quite remember what those charts did. I think they did go up, gap up today, and then some profit taking. But
gosh, for some reason I don't trust my coffee. Yesterday was not too good either, and today's not too bad either.
And you can hear me talking about my coffee.
I want to pull up the sector view so you guys can see like what's actually happening across the market. Because we might be looking at chips and you're like, wow, everything's a short. But when you look at the whole market, not everything's doing that. Right?
See, now we're identifying. You're like, wow, everything's a short because you're just zoomed in on the chips, which is not what we want to do.
And biotechs, yeah. And wow, it looks like there is a good chunk of things doing it. Although the VIX is still not really doing come back down. But healthcares, they like those. Dow Jones, they like that. Staples, they like that. So more.
So you can see we're identifying. It's like, okay, Dow, Staples, healthcares, they're not selling those. So that tells us it's not market crash, or else we'd see these going down. We'd also see Apple going down. We'd see everything else.
As we can tell, Dow Jones, Staples, healthcares.
And we can't say like to start the morning. There's a lot of selling
going on. IBM weak, Qs weak, SPY week. So you kind of know what's going on there. And then the energy's also still a week. So we get to try and hold on to some of those shorts in the Qs and stuff. And we'll see. Given there's a lot of 2 up and reds, I'd say about like 75% of them. I would say we might get that outside day and then recover it. Is kind of what I'd be thinking here. Financials though, you see they're kind of picking up the slack, which could keep us a little stronger. So JP Morgan for now, not doing too much yet.
We're identifying now. We mentioned the financial break. We're identifying. It's like, okay, they're still confirming that.
Potential 3.
So again, it's
We don't
not
see outside
everything
data, so
selling.
potential
Which
counter down.
we said it's like maybe it could go 3 on the
XLF,
day,
what
and it's a
do you do
maybe.
next? MasterCard,
Right? It's not
Visa,
like it has to go
Morgan,
3 like
Stanley,
Google. Like
Stanley,
it's going down
Stanley,
there.
So they like MS this morning, so it's gonna be on the observations list.
And then you can see we identify this. We did not have that there, but we had throw it on the
Nice long green daily
observations.
bar. We got all day to go after that, right?
So we have all day to go after that because of how green it is.
The Qs goes 3, 2 down 15. So that seller that was here in the morning rejecting 463.53. The opening is still here on the second 15 because it made the new low. Now since it's a 3, they could get countered, which you can see initially they do on the owners.
You see we're identifying the 3, and it's just
you
have to understand the 3 is a broadening formation. So if it goes 3-2, you can stay short. If it goes 3-2 and reclaims the 3, you can't.
Other thing you want to know here is we already said
you see IBM is much weaker.
This could go boom, 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 boom with an outside day. You want to know about that? You see the 3-2 in there.
And you see what we're identifying here is IBM a bit weaker than the rest because notice it's not a week in force, it's barely green on the week. So like if anything's going to go 3, it'd be IBM. So like that's kind of what we're going to hone in on is if there's going to be any good shorts. And that's one of the 3-2s.
Google to the downside. Did we know the momentum shooter? Yep. You got another one on the 5-minute into low day. And 169.3 has
another momentum shooter Google. And that was like I think I had Google, and then I had
Shopify. That's shooter 15 for a red strat day, which can negate the week
like
after.
One or two of the chip names, and that was like about it I was able to grab myself.
MUs hit lows,
and this is just in the morning. It's really quick, so I can't get everything myself. I try and just make sure everyone else is getting stuff.
So
see,
some of them do it, other ones are going to be stiffing up, but inside bar shooter. And then FSLR 3-2 down. So you can see the red strat 5 did fill.
Yeah, red strat 5 FSLR low day causes the 3-2.
3-2s for the outside day as well. Off the inside 5, just as mentioned, there's your 3-2, give us the 3. And AMD now becomes 3-2 down 15er. You can see working their way back through that PMG right there off the 10-minute, right? And then when you go to the 5er, double inside down. Reconfirm outside day. SPY double inside down causes 2-2-15 with 5 minutes to the 30 flip, so that's not good. Hughes goes 3-2 down with the IBM, puke.
You see, we're identifying to start the day there.
They are puking. So Crocs might reduce some there. I would recommend doing so. Is a 15 try now.
You see Crocs. So it had the 4-hour inside up, makes the new high, and we're like, you got to reduce some there.
Morning low, and then this could go outside day. That'd be an issue. Or NVIDIA 3-2 down 15 or momentum. And you can see bearish engulfing 3. Which
you see, so momentum on NVIDIA,
bought it up, sold it down, and resolved
et cetera.
And this 2 reconfirmed.
And since these are all 3s, we know they're 3s. If this momentum does not stay down, it's back into a 3 broadening formation. So we know that's a problem.
While this is happening, Dow Jones still up at the highs, 325 and off the raises.
So Dow Jones still holding above that equilibrium.
Momentum inside 5ers cooking. So if you're trying to get in there, that's where you do it. And you might be like,
you see, we're identifying Morgan Stanley's momentum 5er, which means you get the really tight stop on it. But if it does work,
back through, they're just sitting here taking the offer, trying to fill a ton of shares. Potentially, that inside 5ers momentum measured move, and they go in here and they buy another 2.5%. So,
and this is a specific setup called a measured move, where they buy it, and then they sit on the bid here. And then since they bought here, we've got continuity to tell us that they're buying this week, they're buying today. When it goes sideways and then breaks up, people call it a bull flag or something. What you're actually identifying is they come in here and maybe they fill like a couple million shares taking the bid or taking the offer. Then it goes sideways, they sit on the bid, and then they're like, okay, got to fill another 50 million shares or whatever they're doing. So
if that were break, you can't get a huge position on that.
Quantitative analysis of what we're actually identifying there.
Puke. AMD, a little bit of puke. ARM after reclaimed yesterday's highs. You see puke in there.
So we're just identifying some of the reclaims and
2-2
whatnot.
to the downside, but daily chart looks like this on ON. So 2 day on ON, pivot, come back through those
We're
guys.
identifying some of the short setups. We didn't have a ton of short setups going into the day, so we're just flipping through and we're like, well, a lot of the chips are 2 up in red, so what could be a 2 down on the chips?
So if you're going to realize once it's a 3 on the day, you're probably going to go.
Prefer to go in short Google.
Maybe you can get the low of that hammer on the day here because you do have this daily broadening information, something along these lines. But you don't have a broadening information pretty much at all. It's at best like we can draw it like this. So if you zoom out a little bit, you can see you have this try back in here, they poke up and then back in. You could take these guys out, 110.22. After that, we have no idea. So
identifying this, we're like, it's an inside week, so it's not really the best thing that we want to trade.
Google, what do we do on a gap up? We go and short the things taking yesterday's lows. Isn't that amazing?
So you see, Google, what do we do on a gap up? Go and short take things taking yesterday's lows. So we got 1, 2, 3 entries in here short. Puke.
Rob really figured it
169.3
back up. Well, market pukes. Day week 60 in control there.
You can see we're identifying now. There's some buy signals occurring. You got
60 red strat.
Pfizer 30 in there.
Caused 3-2 day. I also saw on Twitter there's some call.
Actually, a 15 in there, and then there was a 30 Pfizer, which did work.
Inside on Pfizer, so you set it up for next position. If you're in a position there and it wins, so be it. It takes a while, but you got time.
We're talking about people on Twitter, and they're like, "Oh, on Twitter, there's a ton of call flow in Pfizer," and we're like, "Oh, maybe that's right. Maybe it's not." And then you see we're going and talking about Google and whatnot.
Golfing 3, so not too good there. Not for the longs at least. IBM 3-2 down shorts. That's a really good one. If you got the 10 in there, that's an ad. You got the 15 3-2s.
You see, we're identifying the 3-2 down. Just have to be aware, and we always, whenever we teach a 3-2 down, we always teach your stop has to be there. So whenever we're talking about this, everyone knows where the stop goes. So if it stops out, it's not like, oh, I'm going to cry and the strat doesn't work and this and that. It's like, okay, stops you out, go do something else.
As well.
We've got more than enough to do.
And if it does not work, just cover it completely because it's a 3 on that 30. We cannot let a 3-2 down go green.
And you can see, if it does not work, cover it completely. So anyone that's short in the morning trying to add into that, got to cover it completely if it does not work.
No inside 5er, it's a momentum.
You see, Morgan Stanley does not give us the inside bar.
For an inside bar.
I prefer the inside bar because it's a signal that we want.
Again.
Some people are mentioning LOY, so we're pulling the chart up and just checking.
And then now, once it's doing this, you got 3 positions and you're good to go. You can do whatever you want.
So you can see Google second 30 day does reconfirm that.
Add to it partially, reduce it. Ideally, just hold it. Right, we got nothing to worry about. AMD 3230 back to previous range, daily PMG. That's something I want to know about. AMD 3230.
See, we're identifying some of the 3-2s.
Scrambling
You say, like, I want to know about that. And the reason is because if that condition doesn't change, all these guys are losing trades. You can see the broadening formation in here. Poke up, poke down, poke up, poke down, bigger poke up. And then if that 3-2 works, this is a 3 broadening formation getting bigger back into a different one, which could take all those guys out. In this case, we had these broadening formations. It went down. But, you get stopped out because it comes back up later.
Risk at most, your risk goes to that daily open. Or not daily
in
open,
this case,
open.
this is one that I tried and I just got stopped out.
So be AMD. We'll see if it's going to have.
You see, we're identifying, so it's only AMD doing that. When you look at the semis, the other semis are fivers back up. And you can see Goog. This is the main short that I had for, I think it was like $1,000 something, and it was like a $400 position. It really isn't that big. When I'm alerting ads and stuff, normally I'm unable to fill them because of how quick they're happening right in the morning. So I try and get at least one position on 1 or 2 signals that I can get. But just the fact that I'm streaming makes it difficult. Trading is really a 2-person sport, which is why we have stat. So like when I'm talking about all this stuff, everyone in stat is hopefully going in there and getting all that stuff done. And you see AMT, we're like, okay, reclaims the 3. That's not short anymore. Can't be.
My cues at this point have firmed up a little bit with the fivers as well. You can see the 5-minute tries in here. So this could be that triangle layout against the weekly group, where the weekly group tries and races it back through this. The only thing is if we're like 15, 30, 60 guy, you got no 15 or 2. 30-minute is inside on cues.
So you see we're identifying the fibers firming up, right? But we got no 2s on the 30-60s, which is what we want as intraday traders.
So we get some directional bars. Pfizer 2230 on the flip, hammer.
So you can see Pfizer, we're now identifying the 2230 hammer.
Today, but the magnitude you're just talking about on the day. That'd be a 3-2 up.
Say the magnitude would cause that.
Healthcare's still holding green on the day, so if we're gonna have any buys, it'd be in there.
And healthcare is one of the only sectors full time for continuity up. So we're like, okay, we have some additional evidence across the market to help.
Morgan Stanley and the momentum fiver hammer did get moving a little bit.
So Morgan Stanley does get going a little bit. And
so fiver versus against is 119. We'll see.
I personally said I was like, I wouldn't touch that.
And if we flip over to the intraday continuity, just to give you guys a good view of what's occurring here, you can see we're conflicted with the 60, so we lack evidence of that 60 seller right now. Does not mean that 60 seller has to be completely gone. They could come back at any moment. That being said, though, it's completely conflicted at this point, where the 5, the 15, and the 30 are green against the 60 at the bottom of that 60 upside bar try, so they could rip back through. They just haven't tried to do that yet. ABGO does 3-2-2 15er. Fun to say and fun to do. NVIDIA could do that as well.
See, now we're identifying the ones that are now reclaiming. So we have these 3s, and we're like, yeah, 3-2 looks like a good short, but back into the 3, that's a flip long, because we know, and what we talked about, the broadening information, right? Everyone's short, and then it comes back through those guys.
Still seeing IBM much weaker, and regional banks still much weaker, regional banks.
And then what we're doing is we're identifying the shorts. Like the ones that have not reversed are the ones you stay in. The ones that have reversed, you either flip long if the weekly and monthly look good, right? Or you go to the stuff with continuity. So we hold winning positions, we cut losing positions.
Gold,
and then you're left at the end of the day with all the biggest winners.
JNUG's inside day, so we're not seeing much of that. It's got 1500 inside down on JNUG to start the day, so no good.
See, we're going through the strat attack lists and everything.
To take out Tuesday's lows. We might see some triangle out in the JNUG gold stuff. Pfizer, very nice off the T230, and we had the 15 in there as well. Might have stopped you out. That's why you just get back in.
You see Pfizer right away, 30, and we said the 15 might have stopped you out, but right back in.
Into the lows, coming into pivot target number 2 of the day, and we got 2 more to go to give us an outside week.
And we're identifying Google, really red. We'd love an outside week. Still have no fiver against. So right short in here, still good. Right? And notice every market participant in here intraday is a seller at that point.
Thank you. Google, that's a 200% for me, 188% to be exact.
And you see Google, 200%.
Taking profit. This is right at 160 psych, as mentioned in the chat. So if you're interested in just playing off that psych level, do some profit, take you at the lows. It'd be a good fill there, 190% right now. And surely I say to you, you do not need very much money to make a lot of money. I put $400 in that total, and I'm up almost 1,000. It really does not take much. People underestimate what they can do.
Don't need that much to make much.
Oh, and close
when you're trading the strat, you need the big move. Don't need much. This is all intraday, right? So,
and you're like, Alex, why would you do that? Well, we mentioned 160.93 this morning. That's where it's going, because that's the other side of the 3.
You see, now we're just kind of talking. We're like, why did we do that?
3 cents this morning. What would they go to?
Because while I'm doing this, I'm simultaneously looking for trades myself and things that line up with my plan. And the plan is really simple. Market gaps up, go and short the things down. Gap down, go long the things that are up, and then trade the 30-60 simultaneous breaks as the day goes on, because I can't trade the morning fivers and stuff.
I'll trade 200%.
Very well.
This week. Should just go instantly, right? Pfizer, up they go, 3-2 day add on the outside 60 if you'd like to. And if you want to create that winning position and leave it, you can just hold it up in here. Want to see them get above this high and stay above. They start coming back in like this, 1 penny. You can either say, well, it's not coming back to my entry, it's really green at this point. And that's fine.
You see, or you could say, now we're talking about position management. So you get the 30, works, boom, winning position, break even. Here. You can either decide to reduce here, or you can say this continuity is really green, we're going to give them the rest of the time to do that.
Then you're in, right? So create that winning position and then
so I'm talking over this. I'm just trying to explain. The speed talking is just so we can get through this quick, because I want to get to bed soon.
Google still puke. No fivers.
And you see Google. We just say still puking, blah, blah, blah.
In here, they did make a new.
And I think once we get this first fiver against Google,
I see no need to be super greedy on Google, so I'm going to take a little bit partial here.
But if you're interested in watching all these replays and stuff, you can get them all at Stat. If you join the premium section,
if we get that,
you get access to all of the playlists.
So
and I think even if you were to leave Stat after joining for a month,
where the buys at, well, anything full time,
I don't know if I should say this.
Going down.
You can probably copy and paste
this,
that and keep that link, and you can watch all the replays. You would not get the live streams.
32 down, gap up, sell, MU, gap or name.
And you see we're still identifying some of the chips. Those chips are going, some that are continuing, some are not.
Oh, 3230 down, potential outside day, full time for count duty, still a shooter month.
So we're identifying some 3-2s in Intel. I did try and trade this one. It was just a dud.
Where could that be going?
5%
Intel 19.3
loss
for
or
the small count
10%
guys.
loss, something like that.
You could go probably 19.5 put on Intel, and it would be pretty cheap. Pfizer, we got the longs too today, don't we? Yes, we do. There's
you see long and short today, right? We do that every day. And you see, boom, right off the 30, up they go. And notice it's a 30 signal. So sets up for 30 minutes to try and find that signal before the new flip. And then we find it pretty much right when that's breaking. We're like, all right, right there.
They're long, boom, blast off. And you can see almost a 0.7%.
And you can see it's not the biggest move on here, but on the options,
that's not that bad.
You can buy like 100 of
those. Now you're out of the
for
tribe.
less than like
$600. See how high day, what to do. Inside one, boom, reconfirm.
Or maybe like $1,000. But Streamception, yeah, right.
Yeah, so these chips, I don't think they're turning around. I mean, they go low day again here. We missed that inside tenor down as momentum, so be it. But
you see, sometimes we miss trades and we don't care.
Hard to get
so be it.
Something's up, something's down. And like I said before, it's like the read is kind of, we'll probably get that outside day. Maybe there's rotation into staples and utes, which we're kind of seeing today. But for the major part of it, we want to see, do we change any of that weekly stuff? We go to SMH, still the weakest green, right? So we could go outside day and then all the way back through the weak green, and that'd be part of the strat, right? So just want to be aware of that. Intel smacking the lows. Full time for down, down, hit the bid.
You see, we're just identifying all this stuff, and then what's going to happen is the 60 is going to flip in here.
I still prefer the outside week, right?
We're talking about Goog. We're like, we prefer the outside week, but down in here when it goes 2-9 green,
you can either reduce. You can either decide to reduce. You can do it even in here or wait for the 2-2. Or you can just hold and say, well, if I'm short all my positions up at high day, probably not coming back. I would opt for the first one just because I'm kind of a little lady when it comes to holding positions really big.
You see it, I'm like, I would opt for the first one. At this point, it was like a 200-something% trade, and I took most of it
gains
off.
into the lows. Like if it's up 200-something%, I'll take some off. I'm fine with that.
Yep.
Pfizer though, up they go. Give it to them, Pfizer. Stick it to those shorts that are selling the chips. We have access to updated materials. I believe so. We had a little conversation about this, and what we kind of decided was that original bootcamp members are going to have access to every ongoing bootcamp into the future. So everyone that got in there the first time really got a good deal, in my opinion.
And we're just
chatting. That could be subject to change.
So during the whole entire day, the whole thing about stat is like, I'm doing the analysis. You have a plan. If it lines up with your plan, if it's a 2-2 reversal, rev strat, a 3-2, whatever you're doing, you're trading gappers. Then you go and trade those things. If you're not doing that, you ignore that stuff. And then if you hear like simultaneous break, 60, SPY, Qs, Dow Jones, then you know like that's when you start trading.
5-minute inside up PMG on SPY. So that could be a little issue intraday, 5-15-30 change with that 5-minute inside bar. So they could take all these guys out in like one fiver. We'll be aware of that. Still conflict with the day and month, but the week is still green at this point.
You see, we're identifying. It's like it could do that, right? But still conflicted a bit.
Not like a giant position.
And this is because the 60 flips in 10 minutes.
My heart, but to be the rest. SPY from the inside, to be closer to the next 60 flip, which increases odds of that outside month.
We're talking about Pan W, blah blah blah.
Google, you can see firms up 2215. So that 2 up red fiber failed to reverse. So they went 3 reversal, 2 up red, no reversal, 2 up.
So we're identifying the
reduction
at the lows,
full exit if you want.
2215 full exit.
You can leave from running position, right? You're made all your money.
If you wanted to, you could leave some. Depends on the trader. Personally, I go pretty tight.
Inside 30 up,
get 200% intraday. I'll take it.
A little stronger than the rest.
And you see how we're identifying some of the stronger chips.
Still good.
And we're saying stronger stuff.
You're holding the running position
right now.
Is it went 2 up, 2 up, 2 up in red, and then 1. So it's not reversal yet.
Flipping through all the indexes. We're identifying some of the things that are breaking up with the
Staples, 3-1-2-15 are to the highs.
You see, like Staples is doing some of that. And I believe we took a loss here in Coca-Cola.
Daily TMD, Coca-Cola, small account guys. You want to know about that one, Coca-Cola.
So we're mentioning specifically a small account guys.
Because the PMG tells you you have a lot of stuff to take out,
etc. We're going through it. And not every day is like this huge winning day, but as you can see, when we're going through this stuff, we're trying to pick out where everything's doing the same thing. And down in here, you're going to see us call low a day.
3-2 down, puke, 60 right there.
And you see there's 3-2s down, so puke on QCOM, which was a 3-2-30 in the morning, was a 2-2-5er in the morning with all the other chips. So we're identifying that's still doing that at that point. And we're going through this, and then we're talking about Qs and SPY. And then right here,
you can see SPY, they smack the lows, they take out the nearby 60 pivots, and SPY is now right into this equilibrium here. So in the middle of that equilibrium here is where the buyers and sellers agree on price, right? This range. So for now, they're back in.
You see, for now, they're back into the equilibrium, but...
Right, that's a good thing. If we go momentum fiber down, we'll take the low that. Take these guys out.
You see, momentum fiber would take the lows, and I actually miscommunicated that. I thought that was an inside bar. I just didn't see that.
948. But they go down here, and then inside fiber, if it's closer, re-breaking that equilibrium, getting back above it, what it tells us is those buyers and sellers who agree on prices still agree on that. And
so you're identifying now the try. They made the lower low, right? So if you're a short guy, maybe you got shorts into the low. You can't short down in here because you need to short back through previous range.
They would put it back into this previous range. That could cause problems for any shorts. That's
See, we're not identifying
fine.
something to try.
Sometimes the market goes down and then right back up. Just close it.
And then we're going to identify simultaneous 5-minute break across the
Then
indexes.
this 3-2 down reclaims the low of this 3 right here.
And you can see reclaiming the low of that 3, which is broadening formation.
Or actually, no, 60 is not in your favor.
And you see we're talking about the Dow. We're going through all of them.
And it starts inside week here on Monday. So you can see they poke up, they poke down, they poke up, still inside week. So what can we expect? Back down there. Now, since we're not staying out of this 3 right away, maybe they chop it up for a bit. Because this is now our sub-trend here. So for now, could you try longs? Maybe, but it's inside week. I prefer to go buy things that are stronger.
So you see, we're talking about the shorts. We're saying, well, it failed. If you wanted to try longs with the Rev Strat 15, you could do that back into the morning outside 60, which did, I think it paid on
Dow Jones, mine the potential fibers back up. Same SPY, same.
So we're saying SPY, Qs, Dow Jones, mine the fibers. They're all fibers back up.
All attempting to change 60 continuity. So you do not have intraday.
And say we're attempting to change 60 continuity. So again, 225er, if that works, what does it do? It changes 60 continuity. We identify that.
Qs does it, simultaneous fiber with SPY, boom. Dow Jones does it, boom. So a little bit stronger in that stuff.
Simultaneous 5-minute break
fibers
across
for
the
5
indexes.
minutes. They're trying to get that back up there. Let's say this fails, it'll be a simultaneous 222. So that's got to work and stay.
So we say it's got to work and stay, because if it fails, the 60 is still red, right? So we have to understand where the period of control is with the 60 group, because that's the group that controls intraday price. Now we're just flipping through the charts.
Morgan Stanley triangle layout 15, or notice the 2.
So some triangle out in Morgan Stanley. This is what we wait for. So instead of taking momentum, we want to see these guys get short first, blah, blah, blah. But I'm starting to get tired here, so let's just get through it. Then we're talking about some broadening formation stuff on the SPY.
It's all just which range are you reclaiming? Where's the other side of it?
And there's some questions intraday. You see, it's kind of the same thing we talked about earlier.
We're loaded this. What did this 2-2 day do? It reclaimed this range here before earnings. Where's the other side? Or, okay, maybe triangle out for already down there. And then once it starts going, you see 2-2 reversal down, goes nowhere. 3 to the upside, goes nowhere. Inside stuck. This is where we're now stuck. Right? We're creating a new range in here. So we're going to create this range, like so. And either that successful breakout above this, which would be like a 2-1-2 momentum continuation, or it's just 2-2 continuation. So like you look at the 5 minute, you have 5 minutes for that to work. What happens? Second fiber reconfirms inside in green. That's still good.
We're saying
you have
reconfirming of the 5 signal,
yeah,
break even stop still good.
At this point though, inside 15,
when it goes 2 up, you could add, but we prefer that 15 2 reversal.
How does that 30 hammer hold? It's like well, low day, just reclaimed all the morning highs. That's the problem. There's nowhere inside.
You see, we're going to Coca-Cola, and we're like, why do we not hold Coca-Cola?
You can get that too.
Even though it was a 3-2, it looked really good. When it reclaims the 3, we're like, nope, can't do that.
Qs,
same with the SPY and Qs.
Where's that occurring? The bottom of an outside 60, 2 down green, flip long, right?
You can see 2 down green, flip long Qs. We're saying don't
think
too much.
215 or second 15 of this 30-60. So that is going to be a so be it moment right there.
Yep, so be it, right? If you get stopped out, so be it. There's more than one trade to take.
We did. So that's I got to reduce by half, put your stop low day, and then just well, if it works, it goes up there. Create the
so you say once it hits that, we're like, okay, you reduce that 5-minute guy. If you're that guy, you can reduce it by half, put your stop at the lows, and then potentially goes up there.
Take your partial if you want. Widen that stop up and let yourself win.
Say partial if you want, widen the stop up and let yourself
15 hammer rev strat Qs as well. Sorry, I forgot to mention that. You should be adding to that on that 60.
And then I correct myself because sometimes I do get it wrong. I'm still a person, right? So it goes 15 rev strat, and I'm like, oh no, you should be adding long. So sometimes
that means
things happen like that, right?
Just like we said with Intel's gonna be doing that, so it's a problem. But
ARMS is Intel doing that, and then ARM, notice ARM's 2 up, and then green on the day, 30's up. AVGO, green on the day, 30's up. And this is us identifying that relative strength. Oh, it looks like you got disconnected. We're identifying that relative strength in that stuff because it did not make low a day when the 60 flipped, unlike other things. SPY made low a day and then reclaimed. That stuff too strong to take low a day.
Like we said with that Dow, that 60 is a little conflicted right there, and it's still down.
Inside bar 5
SPY is at 60, about to be green. Yep, now change control to the 60-day weak guys to the upside.
So we're identifying all this stuff, and we just go through it.
And SPY still 2.
And we see that Dow Jones waiting for the 5 minute to go 2. All these fibers, 15 signals, SPY and Qs, they're still good. Coming back through the morning range.
Got the low.
You just go to here.
15-3. Qs, there's your first 5. And good, stays good by going 2 up again. No, you're off to the races.
And then now we're switching over to the 30 charts and all that bigger stuff.
That's what I want to know. So we reduced, right? Reduce that low day. 5 minute seller that was in here, and then take some off. Now if you're
gonna blah blah blah.
Back into this mother bar. No. The bullish continuity.
Doing some scans and whatnot. Now this is like the post to Twitter. So we're talking about the Fiverr, and we're like, yep, good. Post it to Twitter, and we're like, hey, you guys see that?
This stuff maybe you could take.
And then some
maybes. I apologize. I think I did mention WM with that daily PMG earlier.
See the 2215 SPY, nice, working up into the high day. That's what you're expecting with that Fiverr. Reduce, let your position win, go to the highs, or just hold, right? And that is going to be that. And then we start seeing the new 60 flips. There's some breaks in there. These are going to be the stronger stuff because they're still green. And they were the shorts in the morning. First 60 of the day was red, right? But this is why we understand the decoupling. If you're in the morning, you got 5, 15, 30 signals that only last 5 minutes, 15 minutes, 30 minutes. Then the second 60 opens, it'll confirm that or negate that. So when it flips in here, you got to take your short positions. If you made anything, flip long. If you held off the first 60, then you go in there and buy it. And the 60 in here causes that to get going. And we identified that 30 inside bar, which caused that 60 to set up. So this is an ad.
You want to see like 80 names on this list. ideal.
And then we're identifying all the 322s on indexes. Fun to say.
So let's say things were to fail, which they totally can. Right? If things were to change continuity, we stop out. That's fine. But let's say things were to fail, this would be where we want to be.
And we're saying like, well, if things fail, it's like we're always prepared. If it goes up, we have these positions. If it goes down, we're gonna go the other way.
But at this point, everything's got 20% of the market going down. So 80% up, that's a very strong bias. It's a buy. It has to be.
We're identifying, we're like, pretty much it's a buy on the 60. Like 80% of the market's going up at this point. And you got the 32260, which this is what we were focusing on, or what we mentioned on Twitter may occur. So you can see we're getting those fibers early to set that stuff up. And then the 60, you have 60 minutes for that to set up. So you get much more time to identify that signal setting up.
That's all you powers. I'm not touching that one. Even AVGO.
SMCI is doing some of that.
Yeah, more than enough time to do
and
that.
I was like, nah, I'm not going to do that. It's mother brought to the morning range.
Buy high day. Get Qs, high day. Almost. Getting there. Dow Jones, that's a buy, right? Ever since the Inside 60 confirming what we need to be true, that's a buy. Has to be. MU, 15 momentum hairs and get the day green. MU.
And you see, now we're just talking about the 60s, 3-2 Dow Jones and all that stuff. And that's pretty much the morning stream. If you're not strat, you're like, well, that's kind of crazy. I understand. But you can see in here, so even when you get stuff like this, where it goes all the way up and then comes back, this is why we manage our position intraday, because if we're a 3-2 guy in here, we can reduce our position once it starts 5 or 15 or against, which is what we saw, 15ers. That's just the last thing I'm going to talk about up in here. You can see up in here. So right here, second 30, right here, we can just buy it with our stop here. So we're risking 3 cents Dow Jones. It rallies at $1.42, changes to red 15. 2215 here, we just have to reduce, right? 60 cents. So if we wanted to, we could either fully exit or we can move our stop down into here for a break-even position. And then later in the day, you can see it goes stuck inside of this stuff, and then we're just like, okay, we're just gonna wait. And then the next day, if you're holding those winning positions from the morning, up they go. And then in the next, or in this, we kind of skipped through it, but there were some 30 signals and whatnot. RevStrat 30 on the Dow was an example, and that was coming off the fiver, which you can see if we drop all the way back in there. This is that 2-2 fiber simultaneous break, then inside bar add, which sets up the RevStrat 30. And you get the 1-3 RevStrat, and then all the way up into the high. So you get to create this big winning position. And then once the 15 starts coming in, reduce, and your stop can be all the way down in here if you got it here. And you're risking like not that much, 26 cents on the inside bar break. At most, you're risking 22 cents, and then 245. So your break even when you take half off is $2.45 lower. So it's really, we're just identifying the signal, create the position, do so on the strongest or weakest names, depending on is the market going up or down. So like in the morning, gap up sell, we go and short the things taking yesterday's lows. When things start recovering, we go and long the things that were strong, like the Dow Jones, the SPY, the Qs, index wise, or go for the things inside 30 that failed to take the morning lows. And those are gonna be the best buys should the market recover. And I guess that's the last thing we'll show you is like AVGO. So we got a 30 in here. You can see 3, 1, 2 on the 30. 2 reconfirms. Then this is inside 60 and up right in here. 30 minutes. Second 30 of the day, 2 up. Or not, second 30 of the 60, 2 up red. This is where you have to reduce. But if you got this 30, or even if you were late and you got this 60 stuff in here, $1.89 lower is down here. So your break even does not get hit if you're doing that correctly. Maybe it does, maybe it doesn't. But across every setup we're doing, we can create so many winning positions and then hold them. And in this case, the next day, and this is the other stream that we did this morning, we had all these momentum 15s to add and create more positions in there, even if we missed this stuff or did not hold that stuff right in there and capture all this stuff into the close. So that is about it for me. You said, can simultaneous break be any time frame? Yes, it can be a 5-minute, it can be a yearly chart. So like what we do is we identify sectors. So healthcare's, go and watch my macro video. And this is super important. If you're going to learn the strat, you want to type in Alex's options. Macro update 2024. Nope. It's not pulling up the one that I'm looking for. But we have a macro video that comes out every year, every quarter is normally when we're doing that. And if you go and check those out, what you'll see is we're talking about all the sectors and then like specific things in the sectors, or maybe stick to the sectors depending on how much time I have. That being said though, if you go in there, you're gonna see healthcare's inside bar year. It's like all year you got XLV doing that. Anything in the healthcare's, if you go to the year, this is the last thing I'm talking about because I'm starting to diet down here. But you'll see in force on the year, I mean scan, here's all 90 yearly signals in force. And we go in the healthcares, which ones are a buy? All these, boom, 28% this year, 70% this year, 15%, 15%, 34%. These are all yearly inside bar signals. We can also go for like 3-1s, specifically Humana. We can go for like 2-2s specifically. We can go for whatever we want. 3-2-2s. I don't know if there's any in there. There's not. But that's an example. Some yearly break on XLV, and then we confirm that across time frames. And then since that simultaneous year is occurring, anytime the month goes green in here, we go and start creating positions. The day week 60 groups, whenever we get signals, we create the position, let it go, right? And that's really the key to it. Do your analysis and understand what you're looking to trade, and you can do it. One time frame and continuity on your side, sure, but continuity is not specific to like, it's not do you have continuity specifically, it's also how much continuity do you have. Because if the healthcares are up 20% to start the year, they might go 60%, right? If you still have like 8 months left. So you could have continuity up, but it might be only 1%, and that doesn't show much aggression. Whereas if the continuity is up 20%, you have a lot of evidence. So like with AVGO, when we get towards the end of this week, when this is up 6% in here, or 9% going into Thursday, or today, when that 15 momentum hammer occurs, we have evidence that that 15 hammer is a lot more valuable than the ones that were down here, because we have so much continuity. It tells us they're stepping up, they're taking the offer, and as price goes into these highs, it will speed up. It's like when you go into SPY and Qs, you see it's a grind, it's a grind, it's a grind, boom, back into this stuff, into here, they start speeding up because you see that previous broadening formation. They had some trouble reclaiming it here, and then they started getting going, and then boom, boom, boom. All these shorts here, they start panicking because everyone that trades is thinking, oh, this is a bearish fair value gap. I'm going to have my stop here. Or, oh, we're going to hit this, and then support and resistance. This should be resistance because it was previously support, and blah, 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 blah. And then once it starts racing back through this previous range, we're like, boom, 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 buy, 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 because we know we're going to take those guys. So that is about all I got from you guys tonight. I hope you guys enjoyed the video. We haven't done a stream like this in, oh gosh, it's been a couple of years as far as going for 3 hours straight. But I hope you guys enjoyed. If you did, like and share. If you have any friends, and there's 50 people here, if you have any friends who are interested in trading that haven't seen the channel and you're new, or you haven't talked to them about it, please just introduce them to the channel. That's the only thing I ask of you guys. And we put out all of the free content. That's the only thing we ask is share it and give it to other people for free. So hopefully you guys have a good rest of your night. And I'll see you guys in stat tomorrow. I don't believe I'm going to be streaming tomorrow. We'll see. I'm going to try and be up. I got a little bit of a nap, so I might be up